Good morning, members. I extend a very warm welcome to the second day's CPE conference. Today's first half of the team is on the trust, and we have very eminent speakers for the first half, and then none other than Shankar sir and CA Prashanth. I request Chairman of Bangalore branch to escort Shankar sir onto the dais, and request my Treasurer CA Manjunath Hallur to escort Prashanth onto the dais. I request the chairman to present a floral bouquet. I request our treasurer. Okay. Chairman. I request chairman to give a welcome address before we start this session.
Respected today's speaker CA Shankar sir, Prashanth sir, and my dear professional colleagues, happy morning to you all. I welcome you all for the second day's conference. Yesterday it was a fantastic session. We had completed all the sessions. Members actively participated. Thank you. And we are fortunate to have Shankar sir for today's conference. Last time itself, Shankar sir told, this is my last session. I won't going to be take again in branch. I'll be busy in my professional work. He said, on several requests, he honored to come for this session. We are blessed to listen to him and trust. There is lot of changes has been happened, especially charitable trust and educational institution. Very critical aspects and several cases won by Shankar sir. It's a leading judgments and one recent Supreme Court judgment. It's my landmark judgment on charitable activity. To know all those, we sit and read, no, it will take months together to read those case laws, judgments and understand and start implementing it. But expert like Shankar sir, he'll make you can say simply single line, what is the judgment, how we can implement in our regular cases and how our clients can be get benefited by those judgments. Really we are fortunate to have you here, sir. Once again I welcome Shankar sir and welcome you all. Without much delay, I hand over the session to speakers. I request Pramod to give, no introduction required for Shankar sir, but still new members are there. For their benefit, I request Pramod to give a brief introduction. Thank you.
Thank you, Chairman. As Chairman said, Shankar sir doesn't need any introduction, but I would like to take the privilege in introducing him. A senior advocate and a chartered accountant by qualification and very renowned advocate by profession. He is a practicing advocate for the past 20 years in the High Court and Supreme Court of India. He was designated as senior advocate by High Court of Karnataka in November 2018. Before donning the advocate robes, he was practicing as a CA for close to 20 years and mainly involved in representation and litigation matters. He is a gifted orator and has presented a number of papers in various seminars and conferences conducted by ICI, both at regional and national level. He is an expert in search and survey matters and real estate transactions. His for interpretation of statutes has resulted in several landmark cases which have been widely reported in ITR, CTR, DTR, Taxman, etc. He is extensively involved in a wide and varied charitable activities. He is a member of several committees of well-known organization, association and chambers. He is a reservoir of knowledge which he actively passes on to his juniors. a highly respected individual in society known for his affable manners and Shakespearean quotes. Of course, our committee did have a privilege to hear some of his quotes while just coming to the dais. With this brief introduction, I would like to welcome you, sir, again. And I request our treasurer, Manjunath Thalur, to give an introduction of the second speaker also, so that we can start the session and hand over it to the participants.
Good morning, members. I have a privilege in introducing CA Prashanth G S. Mr. Prashanth G S is a fellow member of Institute of Chartered Accountants of India and is practicing in Bengaluru. A graduate in commerce, he has pursued CA and qualified in November 2006. He is practicing in the field of direct taxes and is mainly involved in search and survey matters, corporate taxation, transfer pricing, international taxation, and handling litigation and representation matters at various levels. Before setting up his independent practice, he was working as manager taxation in under Messrs. Singhvi, Dev and Unni SDU, a chartered accountant firm in Bangalore. He has presented more than 100 papers on direct taxes in various seminars, conferences, and other professional platforms. He has previously served as co-opted member of the Committee on International Taxation, constituted by the SIRC of ICAI, and also as a faculty at the Bangalore branch of SIRC of ICAI. He has also served as a member of the Finance Advisory Committee of the Karnataka State Cricket Association. He is also an occasional faculty at the Fiscal Policy Institute, Government of Karnataka. Currently, Prashanth is member of Regional Direct Taxes Advisory Committee, Karnataka, constituted by CBDT under Ministry of Finance, member of Central Taxes Committee of FKCCI, member of Direct Tax Representation Committee of AIFTP, member of Fee Fixation Committee at Adi Chinchanagiri University, Karnataka. He is a life member of Bengaluru ITAT Bar Association and is presently serving as its secretary. With this brief introduction, I present before you Prashanth G S. And over to speakers.
Very good morning to everyone. At the outset, I wish to place on record my deep sense of gratitude, affection, respects to my mentor, Sarvasri Suresh Venkateshan, late chartered accountant, who has been a pillar of strength in my growth in the journey in the field of taxation. My respects to him. And set you besides, the topic of the day requires young blood. In life, there are three curves that originate in a statistical formula. One is known as an aggressive curve. That is, if you take an L, when you look at an aggressive curve, you go very high and then come down, flat, big fall. Then the second one is known as a Laffer curve. That means you go straight and flatten out. The third one, which all of us should aspire for, is a parabola curve. The parabola curve means you go like that up and come down back. So I'm on my decline. Why I explain to you all this? I'm on my decline in the efforts of my profession. And at this point of time, they said I'm used to Shakespearean quotes. I'll quote not a Shakespeare one, but something else. The most important aspect of life is to understand the reality that let old order changeth, yielding place to new, lest one good custom corrupt the world. This is the most important aspect of life, and profession is definitely part of life. Livelihood is part of life. Life is one of the greatest phenomena of human existence. And as I'm on the decline, when I was asked to speak on the subject, I requested the chairman that the entire aspect of presentation of the issues pertaining to a very vast, wide, and the present hotly debated subject should be presented to you all by a youngster who will have not merely the time but also a great inclination. And in such a person, I have without doubt in my mind to say that we have Mr. Prashanth with us. Before I hand over this system to him, I would like to briefly state the parameters of what each of us have to look in relation to charitable trust. That's the main object of today's seminar or this particular session. When we look at, I'm not getting into detail onto the two decisions which I will address by way of answering any person's query on a practical way after you are being led to by Mr. Prashanth on the intricacies of the same. I will take all question and answers, and I request each one of you all not to hesitate in asking all the practical problems that you have. And as the session is a very long session, which I have requested the chairman to have not a short session, we have a 3-hour session. So any person having any requirement of a particular answer are most welcome to come and ask us, and we'll be more than happy to tell you all. So in the course of the presentation of my colleague, I request you all to take note of the facts that you may submit, coupled, intermingled, interacted with your practical requirements, and feel free to ask us what you can ask all that you all want, and we will give you all that we can. To set you down this general talk on the subject. What are the important areas one has to keep very importantly from the view of the two decisions of the Supreme Court? One is Noble, one is Ahmedabad Urban. Both of them have treaded a path of changing the course, like a civilization river changing its course. These two judgments have effectively changed the course of what each one of us have to understand from charitable trust. Some very foundational aspects and some procedural aspect. In the foundational aspect, I plead and request each one of you all not to greatly worry first about section 11, 12, 13. Look at 115 TD. What is the consequence of cancellation of a registration of a trust on account of denial of exemption under 11 is that the asset which the trust has today at market value on what you have claimed as application will be liable to tax effectively at 45%. Took a very simple example for you all to understand the deep-rooted implication of this section. If a trust that has been, let us say there's an educational trust built over the last 30 years and running engineering college, medical college, schools, etc. Its net asset worth in the books in terms of its book value is, say, let us say 300 crores or 200 crores. But the market value of the asset is, let us say, 5,000 crores, because today land is up. This trust would have got a land of 50 acres to set up a engineering and medical college 30 years back, and the value of the land itself is very high. If the cancellation happens for the trust, the consequence is draconian. 115 TD will spring up. When it springs up, if you will study the section, the time limit to make payment is also probably 14 days from the end of the month of cancellation. Very short time they are given to raise 45. Suppose the value is 2,000 crores and you have to pay 900 crores. Probably you have been given something like 14 days from the end of the month of cancellation. Maybe you will get about 45 days to make the payment. Then they can attach your bank accounts, attach your properties. The consequences are draconian. In this background of the section 115 TD, it is relevant and important to examine what are the pitfalls that can happen in the implementation of the two decisions vis-a-vis the practical aspect when you all finalize, advise, or represent in relation to a trust. What are the broad issues in Noble? The broad issues in Noble are threefold. First, it examined the word what solely means. Noble Education Trust is basically a case on 1023C. First, it said we want to interpret the word solely. Second, they said not for profit, what exactly it means. The second aspect. Thirdly, which most of us would not have identified, in a very fine, subtle manner, has been stated as one of the third issues in one of the paras of the trust. I don't recall the para, age is catching up. What it says is, what is the implication of a income tax regulation under 11, 12, 13 vis-a-vis the contravention of the trust in relation to any other act, state law governing such trust. Like for example, if you are looking at an educational medical college or engineering college, there is one act called Capitation Fee Prohibition Act 1984, which adds its own section. Being chartered accountants and not in the education representation field or the knowledge field, many of us will not know its fine-tuned references that are required to be implemented. All these days, because of several decisions of various courts, one of the contentions taken by the income tax representatives and practitioners is, if there is a contravention of any state law, the question of income tax looking into it to deny me the exemption does not arise. Because you are not the person governing that law. And more so, when the authority under the said law has not issued notice to you for the contravention of the same. So, out of the three issues, first and second are something which we will discuss in detail. Third one is something which I want each one of you all to keep note of. There was a very interesting decision of the Karnataka High Court called Manasa Housing, in which a full bench of the Karnataka High Court said that if there is a contravention, it is not an income tax, it's on a Land Reforms Act. If there is a contravention under one act, unless the authorities under the said act decide to take action on you, some other authority cannot interpret and say that action is right or wrong. To put it very simply in accounting terminology, as accountants, we all look into imports. We all look into various aspects of import in accounting purchases and export in accounting sale. Has the income tax department the power to ask you whether the classification given while importing a product under the Customs Act is right or wrong, and he comes to the conclusion that it is wrong, notwithstanding the fact the bill of lading and the entry shipping bill all are in accordance with law and the Customs Act have cleared it, can the income tax officer come and tell you this import is not in a correct classification, you have put it under 5% or 10% or 15% duty as against 25% duty? Does he have the power? Similarly, the question that arises is, if there is a contravention by the educational institution or the charitable trust in relation to, there are several acts, Education Act is there, Capitation Fee Act is there, the Consensual Agreement Act is there. In the education field, a lot of them are there. In medical, much more are there. Like if you are running a charitable medical hospital, a license is required even to get an oxygen. License is required to keep firefighting. Every license are there, and whether each of those contraventions can be examined by an officer under the Income Tax Act. We always have been taking contention in view of the full bench decision of the Manasa housing, though in a different context, to say the income tax officer does not have any such power. In my view, the decision of the Supreme Court in Noble has made a small change. What is the depth and the intensity of the change? Time will evolve. But definitely as a third issue, they have considered to say that contravention and activities relevant under the other act can also be examined. In other words, to put it in a very, very simple term, the officer can ask you, if you are a charitable trust doing yoga, there's an act which regulates yoga. There's a contravention in the system which your trust is conducting, whether you can look into it. More easier to tell all and practical is the Foreign Exchange Management Act. All of us know a lot of approvals are to be taken by various institutions right from the Home Ministry. Now the rule says you have to open a bank account only in Delhi, in other two in State Bank of India. You cannot even have it elsewhere. There's a contravention there by a trust. Does that automatically get into a situation that the officer has the power to look into it on two counts? Count number one, there is already a action, show cause notice, proposition, maybe an order under the different act. That will come under one field. The other is nothing has accepted. The other authority has accepted that you are perfectly in order and no issue, no notice, nothing has happened to you. In these two, in the first circumstances, admittedly you can be asked and you are duty bound to answer. But insofar as the second one is concerned, where nothing is there, now Noble has said, if you have contravened that act, the power of the assessing officers to go into it has been subtly opened. As I told you, the moment it happens, the consequences that should fly to our mind as an automatic corollary is, if I have contravened, is there a possibility of denying Section 11 exemption? If Section 11 exemption is denied, is there a possibility of cancelling the registration under Section 12, AA, whatever it is? If the 12 AA registration is cancelled, the automatic consequences springing up of the 115 TD provision, and what is the net worth in the organization. In this background, each of us have to evaluate at every point of time and finalizing your accounts every year, and advise the clients accordingly to not merely look at the provisions of the Income Tax Act, the accounting entries, the ledgers are in order, but we have a responsibility to go one step further, examine little deeper and find out if there are contraventions under any other act which governs such trust or institution. And if it governs such an institution, at least we may not be very proficient in those acts, because I am given to understand the number of acts in the country are something which we can't even count. Nobody has the number. It is every day there is some bill introduced by various states in the country. Every day it increases. Somebody introduced something in Bihar. Why we should worry about the Bihar Act? We have to worry about the Bihar Act basically because if the trust is doing some transaction with the Bihar Act and there is a contravention there, automatically it will come. We may be originating from Karnataka, but then we may be actually having activities in some other places also. On a case-to-case basis, this macro level evaluation with a micro level application is very essential to ensure that the client is not put into difficulty at a larger point of time or at a later point of time. These three aspects of Noble, of course, the greatest saving grace of Noble is that they have said that the entire decision they have taken will be applied prospectively and not retrospectively, which gives us some consolation. I had requested my colleague Prashanth to also take note of the fact that the Hyderabad Tribunal, the first decision I probably feel, have come after this in the Fernandez Foundation, who claim to be on part with Tata Foundation or Bill Gates Foundation. A decision against the SC has come, which all of you all should have an idea about it. And it is a very, very important aspect. I am sure my colleague will touch upon the same at an appropriate time. When the Noble Trust has given you all exemption for the past action, the most important aspect at that point of time to evaluate is, they said prospectively. What is this prospectively is going to be a matter of great debate. This judgment came somewhere in September or October? October 26. So 19th October 2022. Now income tax is a assessment on a year-to-year basis. Whether the transactions done up to October 22 are to be ignored or waived, or the contraventions will be not taken serious of. Now it has taken some time for these decisions to percolate down the professional forum. Definitely a lot of contraventions would have happened from 22nd October till date. We are now already 2.5 months. Until March it will go on. What is the impact of this prospective with relation to assessment year 23-24 is something that each of us have to ponder. And if any of us have clients relating to trust, it should be forthwith discussed with them, tell them the do's and don'ts so that they are very clear. An officer is bound to take a view that if you have contravened it on today, you don't get the benefit of the benevolence shown by the Supreme Court, because if you had done it before 22nd, at least we will be in a position to submit and argue that it is prospective from that date. The issue is, it would have been more happier and better had the Supreme Court said this will be applicable from 1/4/23 onwards. But unfortunately, they put in a general word by saying it is only prospective and not retrospective. So actually it has some impact on that. The decision of Noble has very clearly overruled two settled decisions in American Lodging and Queens. Queens, if you go into a little detail, they have not completely overruled the entire decision. They overruled the decision in relation to what is this solely. So if you analyze it in a very microscopic manner, we all will find some portion of Queens can still be made use of, and it is not eroded. Though American Lodging and Queens were extensively used for this, has been in principle overruled. Ahmedabad Urban Development Authority. That decision has several facets. It has dealt with 5 or 6 different types of institutions which are charitable in nature, and they have classified them into a large bag. Looks like first is the various urban development authority. In Karnataka we have more than 30 urban development authority, because effectively every district has one. There is a Mangalore Urban Development Authority, Mysore Urban Development Authority, Hassan Urban. So there are so many things. These are the urban development. They have set one line of thinking for the urban development authorities. Then there are sports associations. Then there are statutory bodies. Then there are private trusts like the Tribune, which were doing business but applying that money to charitable cause. So right from Surat Art, Krishna Warrior, I think all of you all should read, was one of the most earliest decisions which evaluated on the principles of charity. If those decisions are evaluated in relation to this, notwithstanding that Surat Art is by a larger bench of the Supreme Court, they are this bench could not have overruled it. But well settled principles of judicial propriety, consciousness, actions, a smaller bench of the Supreme Court can interpret and clarify what the larger bench meant. There is no prohibition in law. TMA Pai, one of the salient cases in relation to education, was interpreted in Inamdar of a 5-bench. A 11-bench decision was interpreted by 5-bench in Inamdar. And 5-bench decision was interpreted by 3-bench in Islamia. So those power to clarify and understand what it is without taking the main substratum is permissible in law. Now, in Ahmedabad Urban Development Authority, the law laid down is different for different institutions. And to the best of my knowledge and reading of the judgment, I could not find it to be retrospective in operation. So there is a direct conflict. I won't say conflict, contradiction. One they have given retrospective, another they have not given retrospective. So in this background, when we are looking at 1023C for an educational institution, the chances of you getting retrospective, in my humble opinion, is far higher, greater, bordering to 90%. But when it comes to other associations, it is not retrospective. All pending issues at various forums are going to be interpreted by way of the decision. What is the consequence? The consequence is, in some of them, they have set aside the matter for a sing officer to re-examine. In some of the matters, they have given directions that you are not entitled to. In some of the matters, they have said you are entitled to, but the officer can look into. So there was a great doubt. How to interpret decision? You are saying the revenues appeals are dismissed. In example is Bangalore Development Authority. They said revenues appeals are dismissed. But however, one more para is added, they will look into. So then a clarificatory request was made to the Supreme Court, and Supreme Court clarified it by saying, what we have dismissed, the officer cannot look into it, they can look it in future years. That means for statutory corporations, even though the Supreme Court has dismissed it, in the future years, they can ask you to demonstrate the various principles laid out in those decisions. What they feel is, under the garb of charity, it is impermissible in law for any person to make unreasonable profits. This is the sum and substance of the judgment. The percentages and arguments between two persons debating may vary. Somebody may say 15% is reasonable, somebody will say 40% is reasonable. That is a realm of practicality, which we'll address to when the issues happen on the question hour session. But in terms of law, what they have done is, they have clearly demarcated the thought process that different classifications have very clear different principles. They have said, now let us take BDA as an example for you all, because all of us know that Bangalore we live in. BDA not only gives allot sites to the poor, because the site which is allotted by the BDA is undisputably cheaper, less costlier than what developers sell. There can't be any doubt about it, and I don't think so any officer has a doubt about it. The process is you have to apply. Maybe you'll get it after 10 attempts, 15 attempts. There is a process to get into it. But at the same time, we have to also evaluate and see that the BDA also sells the corner sites. Now, when you have a regular allotment and selling of corner site at market value or auction method, the highest bidder method, what happens to that? Can you say now BDA is in nature of business under 215? In the future years, past year they have given, you can say in lighter vein, they have all said you are waived, you are maaf, whatever you want to say, you are out of the system, we don't want to trouble statutory corporations. Now another aspect will come when you look at statutory corporations is that they also collect taxes. Now all of us know BDA collect taxes. All the layouts till they are handed over to the municipal, Brihatamum, Bangalore, Mahanagara Palike, till then the BDA continues to collect taxes. Can a collection of a tax, which is a statutory function pursuant to section 24 or 25 of the BDA Act, can be used to say that the tax collected constitutes income? This is a very interesting aspect not addressed to. When a statutory authority is there, it not only does statutory functions, but also functions in the nature of trade, commerce or business. To extend the logic of BDA further for you all to appreciate the canons better, BDA not only collects taxes, but also builds a flyover. That flyover is for public good. So many flyovers all around we go, underpasses, flyovers they build. Whether at this point of time, BDA is not charging any money for its use. In the future, BDA has planned to develop 50 flyovers under the PPP model, where the private entrepreneur will be entitled to collect tolls. And the tolls may be given for 10-year period, because all these flyovers are a very small capex, which won't cost hundreds of crores. Probably a good flyover to cross a junction like Shivananda Stores, where I have my office, may cost 8-10 crores. So, and the density of the movement of the vehicles being very high, the impact of a commercial decision in making is that they will give them a right to collect for 5 years, 8 years, 10 years. The concessionaire period will be very short. So 4 years or 5 years down the line, BDA will have to start collecting toll on its own. Whether the collecting of toll by BDA constitutes business income and fall foul of the proviso to 215 of the Act. If that is so, selling of corner sites, payment of tolls, taxes collecting on one hand, how do you harmonize these activities to arrive at a taxable income for an assessee? These are the grey areas in my view, which has left unaddressed by the Supreme Court on account of that's how every decision happens. It's humanly impossible for any decision-making writing authority to comprehend all potential problems in an issue. And now, in my view, a new line of litigation on Section 11 will start from next year onwards, whether the taxes that you and I are paying to BDA is taxable or not, and whether it can be within 20% or not. This is one aspect of it. Sports associations, they have concentrated more on cricket. Cricket is more a religion today in our country. They have said you are conducting IPL, so consequently you will fall within the ambit of business. What is the relationship between? The interesting point in the case of Ahmedabad Urban Authority in relation to sports association is, they have not decided the case of the parent organization BCCI. That remains pending. But the tributaries or the subsidiaries like the various state associations have been decided. The lead case was Saurashtra Cricket Association. And of course, there's a Tamil Nadu High Court and Rajasthan state associations are also part of the decision-making process. As the cost list is very huge, these are the three important aspects. The flow of funds from the parent body to the state body, what is the nature of income? If the parent body conducts a commercial activity, makes profit, and ultimately, as a part of an overall system, gives either subsidy, gives in various forms the money to the state associations, whether that can be corpus, whether it has to be spent, whether it is subsidy, infrastructure, all these things which were all in favor of the assessee have been set to naught, and the saving grace for these sports bodies is that the matter has been remanded back to the assessing officer for fresh consideration. Insofar as Tribune, which is one private entity running business, they were running the paper called Tribune. In the last para of the judgment, they clearly say they have given a decision that it is against the assessee. They are saying Tribune, in which you can't run a business and apply that income for charity, and claim exemption. That is not permissible under the scheme and the Statutory Provisions Act. But however, in view of the smallness of the amount, they have not decided to tinker with the decision of the High Court and in exercise of the power under Article 141 of the Constitution, where Supreme Court can decide a law in favor of the revenue but give relief to the assessee. That is what they have done. It's a very interesting power of the Supreme Court, which many of us may not know. You can decide a law by saying what you have done is wrong. The entire assessment order should have been restored. But that inherent power, the constitutional power under Article 141, to do justice, they can say, I decide for future like this, but now I am telling you, as far as you are concerned, you are exempt from paying tax. That power is inherently available in the Supreme Court, not available in High Court under 226. So they have taken a tribune matter like that. These are the broad canons of the Ahmedabad judgment. Then there are one more aspect in Ahmedabad judgment is those corporations like governing bodies like Statistical Association, seeds certification agencies, all that they have remanded back. There are two other things which my probably colleague will go in depth. Broadly, these are the canons of the true judgment. And I now request my colleague to take you all through the provisions in a detailed manner. And I will come back and answer your questions positively. Thank you.
Thank you, sir. We are indebted to our parents for life. We are indebted to our guru for the way we live. I've been very fortunate to have been mentored by some of the finest human beings, I would say, before they became professionals. CA Venkatramani, CA D Devraj, and Shankar, sir. With their blessings, I'm before you. The topic that was, rather the topics which were part of the meeting today are twofold. One, issues in charitable and education institutions. And the second one was on specifically to repercussions insofar as the Supreme Court judgments are concerned. Before we get on to what are the issues that arise in education institutions or charitable institutions in general, you also have certain amendments which were made through Finance Act 21 and 22, which probably I thought may be necessary before we get on to the judgment and its repercussions. Because this may be useful for most of the practicing professionals and it will have an impact on how the accounts are drawn up, what they are supposed to report as auditors in terms of our audit report, so on and so forth. Insofar as Finance Act 21 and 22 are concerned, you also had Section 11(1)(d) amendment, wherein, as per the Finance Act 21, it requires the charitable trust to invest or deposit even voluntary contributions in one of the modes, specifically for the purpose of corpus also with effect from 1/4/22. Even though received specifically for purpose of corpus also, in the erstwhile you need not have separately earmarked, you might have earmarked it as corpus funds, but you need not have deposited that in the modes under 11(5). Now, Finance Act 21 requires you to do so. Then, if the voluntary contribution to corpus received in a previous year is not invested in the specified mode, then it cannot be said that the trust has received a contribution which qualifies as corpus under 11(1)(d). So it works both ways. Then you had this issue of voluntary contributions for renovation of temples, mosques and gurudwaras. Explanation 3A to Section 11 was introduced. The object, if you look at the statement of objects and reasons in the memorandum, they said there were difficulties expressed as to when donations were being made for these organizations for specifically for the purpose of repair or renovation. Though in effect it will mean when somebody is making a specific donation to be part as corpus, there was no clarity insofar as for the recipients to treat it as. So now what they have done, and even for the notifications under 80G2B, such of those organizations are notified, at their option, they can treat it as corpus of the trust, which means the amounts received, which are voluntary contributions otherwise, which qualify in the normal course to be voluntary contributions, and then the 85% and 15% applies. For them, they at their option can treat it as corpus of the trust subject to the fulfillment of other conditions, which means specifically it was brought in to ensure that there is no difficulty insofar as those funds being made available for temples, mosques and gurudwaras are concerned. One other issue probably which is happening is under the new procedure for registration under 12AB. Under the different subsects saying if you were registered under 12A1 subclause AC before the TOLA, that is the Taxation Laws Amendment Act 2020 came in, and then which was substituted in 21, and then in 22 they went back and said that they reproduced the entire provision and said that it will go back as amendment applicable from 1421 itself. What are the issues that may arise now insofar as the registration is concerned? The power of the commissioner or the PCIT to conduct inquiries. Now we also have the decision in Noble where in dealing with allied acts, how they have permitted under para 70 to say that requirements under other statutes are very important terminologies and the conditions to be satisfied there. Similarly, the commissioner or the PCIT here can call for details to satisfy himself about genuineness and compliance with other laws, which means the decision which has come out in Noble, when they is dealing with the AP Charities Act and the registration not being taken by Noble Education Society there, how they have concluded under para 70 would be that you already had these powers vested in 12AB with the commissioner to say he can look into not only about the genuineness and activities but also about compliance of other laws. Practical difficulties may be there, but sir has already pointed out, equity and hardship are canons unknown to taxation law. Karmachari Union versus Union of India, 243, ITR 143. So therefore, that condition would necessarily have to be satisfied, and other laws which will be very probably practically how we will implement it, what are the pitfalls, how do you, whether ignorance of a particular law would be taken as a bona fide belief for not complying with it. See, you have this canon that ignorance of law is no bliss. But you have Supreme Court in 118 ITR stating that there is no rule that every citizen must know all laws applicable there. So therefore, you can still probably make a case out of that if at all you have erroneously missed out. Saying bona fide belief, because in any statute dealing with regulatory approvals, you have again conflicting decisions. Beneficial provisions, we had the law settled to say that to be interpreted liberally, but you had Dilip Kumar's case wherein to say that statutory benefits being given should be looked at into very strictly. There may be diverse opinions on that and interpretations possible. But what happens now in terms of 12AB? You have a specific provision to say for new trusts to apply 1 month prior to the previous year relevant to which the assessment year is, registration is sought for. For example, if you make an application in June 22, you are seeking application for assessment year 23-24. It says the application should have been made 1 month prior to the end of the relevant, which means they are expecting you to make the application on 29th February 22. Because 1 month before, but maybe that is not been rectified. It has been there from Finance Act 21 and 22 also, but so far it has not been rectified. Because this was there and somehow it is probably missed to be amended. And then you have this issue of conversion of provisional registration into the final one. Whether the period of 5 years to be counted from the end of the year in which the provisional registration expires, or 5 years from the date of receipt of the application. You will have the dates overlapping. Beginning of the year, it's like December 31st to Jan 1st, it's 1 day. Jan 1 to December 31st will be 364. Like that, how do you compute that? And probably the application is made and when the registration is sought for, you will have to follow that. And they have also brought in a new set of conditions under 12AB4 called as specified violations, which are 6-fold. Clause A would be income derived from the property held under the trust, which is applied for objects other than for what the trust was incorporated. Next you have the income from profits and gains of business, which is not incidental to the attainment of objectives. Next, if you have applied it for private trust for or religious purposes, private religious purposes. If you have applied it for benefit of any particular caste, then if the activity which is being carried out is not genuine, or the next one again a little draconian to say, is not carried out in accordance with all or any of the conditions subject to which it was registered. Next, clause F, where we also discuss about the other laws, not compliant with requirement of any other law as required under 12AB. So, the moment it becomes a specified violation and you lose the registration or the trust cancelled, you automatically fall into 115 TD, which are explained to be very draconian in nature. Tata Sons is one of the cases which comes to the mind. But what happened in Tata Sons was, the moment the law was amended to say that dividend would be taxed in the hands separately, they voluntarily filed a letter for withdrawal of the cancellation in 2015. The commissioner did not act on it, waited for the amendment to come in, and then issued a show cause notice as to why 115 TD should not be applied and income accretion should be brought to tax. Tribunal rightly said that you cannot compel somebody to hold the registration. They had written to you earlier seeking the cancellation. Therefore, the revenue's contention that 115 TD had to be applied for Tata Sons was struck down in that case. You will have this issue of, can commissioner impose any new conditions? When we say new conditions, it's not that he's bringing in something of his whims and fancies into the book there to say you have to comply with something. But when he has to satisfy himself about the genuineness of the activities, he can give you some conditions. Whether the conditions can be challenged, whether should they be reasonable? Yes, by all means they should be reasonable, equitable, but you also need to look into the legal requirements of such a conditions that the commissioner is specifically seeking to impose on you. Because in the new regime, the lot of thrust is on the commissioner's power to look into the objects and also compliance with other laws insofar as the registration under 12AB is concerned. Next would be whether the registration of a trust is automatically cancelled when you cross the threshold limit set under 2 subsection 15. You have this 20% limit set based on the Finance Act Amendment in 2016. You have the 20% amendment let. But whether it's automatic or whether the revenue will give you a chance to explain, saying why that violation happened, or you have to probably see, because you had the CBDT circular in 2016 bringing out saying that, but to say that it is not mandated to cancel in that year, but the commissioner can definitely look into it, the objects. By the time he looks into the subsequent year, maybe they have complied with the 20% condition. So what happens for that year in which you violate actually? By the time you file the return or the department looks into it, that issue will remain. You had this common interpretation earlier to say, if something is not done within reasonable amount of time, it's deemed to have been granted. Now, recently the Supreme Court has overturned that to say, non-disposal of application under 12AA beyond a period of 6 months does not result in automatic or deemed grant of registration. Earlier, that, which was a plea which was being taken saying, yes, it was 6 months and they have not given it and deemed to have been granted. Now, in 447 ATR 372, the Supreme Court has said, just because the timeline has not been adhered to by the department does not mean it is deemed to be registered. So therefore, that one thing we have to take note of specifically. Next is computation of income on cash basis while maintaining the books under mercantile. See, yes, hybrid system is no longer permissible. You either maintain on cash or on accrual. But the explanation 3 to 1023C, also in similar in section 11.7 also, is that what is the explanation they brought about? Any sum payable by any trust or institution shall be considered as application in the previous year in which such sum is actually paid, irrespective of the previous year to which the liability pertains to, which means they are bringing it on par with 43B insofar as to say allowed on payment basis. So you maintain the books. When it comes to computation, you are supposed to do adjustment of the provisions made as on 31st March, which the amounts lie payable as on that particular date, then reduce it from the actual application. Look at the other side. You also have income which you would have treated it as income based on mercantile system, but if you have not received it, you file form 9 or 9A, and what is the condition there? In the subsequent year you are supposed to expend it. But what happens if that income does not is not received by me in the next year as well? I would have offered voluntary contributions on mercantile basis, saying on some commitment from certain donors, I have offered it. The money is not received. Expenditure, I do it on cash basis. Then, whether the 85%, 15% criteria satisfies by virtue of showing a higher receipt where actual money has not come in. Yes, mathematically possible. There is income of 100, you have not spent it. But if the money has not come in, how will you show utilization of 85%? The moment you are on this hybrid insofar as payments are concerned. And dealing with large trusts, large hospitals or universities, this may probably be a separate requirement to maintain this. Because there is no other reason. Because probably one of the other things was, you had lot of judicial pronouncements to say, application does not mean actual payment. All that it wanted was, you had the Karnataka High Court in Christ University case to say that applied need not be equated with the word spent. It only meant you have set it apart to be applied. It satisfied the condition for application of income, and subsequently you would have claimed it as and when. You would have claimed it when you debit your P&L account, and subsequently the payment would have happened. Now, they have said, they probably to that extent, those cases, Karnataka High Court in 408 ITR 352, Christ University case, and you have old case of Radha Swami Satsang, 25 ITR, they stand overruled now. Because the interpretation there was, how do you interpret the word applied vis-a-vis amount being spent? So those cases also stand overruled. Because in the guise of Noble and Ahmedabad Development Authority, we should not forget these amendments which have happened in 21 and 22 Finance Act, which are having a bearing. One other important amendment was explanation 4 to section 11(1). Loan or borrowing now will not be treated as application of income. But in the year in which the loan is repaid, out of the current year contributions, then you will be treated it as application in that particular year. What was happening? You obtain a loan, you have these donations, and the amount which are being spent were being treated out as loan, and subsequently when the loan was repaid, you were treating it as application again. The double deduction, what used to happen with the depreciation earlier, was happening with loan or borrowing also. That is now not permissible with effect from 1/4/22, which means assessment year beginning on 1st April of 22. That's very important because it is only, it will be treated as application for charitable religious purpose in the previous year in which the loan or borrowing is repaid from the income of that year. You can't repay it from the corpus again. If you're repaying from the corpus for whatever reason, taking special permission, etc., it won't be treated as application of the income, and that 85% criteria would not be satisfied. And you had a new section 115 BBI being introduced. For what? To bring out the rate of tax under the special rate under chapter 12, to say, for violations of these conditions of 2023, 4, 5 and 6 or any trust under section 11, you are saying that it will be deemed to be income of the previous year in which this violation is found out. The rate of tax is a flat rate of 30%. but you also need to look into the interplay between 115 BBI and 164.2. 164.2 talks about the provision to 164 says where the whole or any part of relevant income not exempt under section 11 or 12 by virtue of 13(1)(c) or 13(1)(d) shall be charged to tax at maximum marginal rate. So for violation under section 11 or 12 by virtue of 13(1)(c) and d, 164(2) proviso says it is at the maximum marginal rate. 115 BBI, which is giving you the thing to say tax certain specified income of an assessee being percent rate of income on behalf of any fund or institution at 30%. Look into it as to how this interplay would work out. You also have the amendment in 1023C in both the Finance Acts 21 and 22 to say the requirement of keeping and maintaining books of accounts and filing of return under 139(4)(c). You have the specific provisions being introduced for withdrawal of registration. Clarity is required for how to compute the income when you're doing under a computation for based on the cash basis of accounting. That is that cash the mercantile versus cash basis. One other important amendment came in 1023C was you had the landmark case which Sir had argued, Children Education Society, wherein it was stream wise you could have taken the income. The limit was then 1 crore, and they said each approval for that particular institution under the thing, you could have had that 1 crore limit which was specified then, institution wise. Now what they've done, they've made the aggregate of annual receipts of the person from university or universities to be 5 crores. So in effect, the word aggregate has to be now understood, probably how revenue was looking at it after this amendment, to say as revenue of all the annual receipts of such education institution being put together, and then in that, from that bracket you see whether it is 5 crores, then you are falling under 1023C, the 3 AD and 3, you can claim that deduction, which is that Karnataka High Court judgment, landmark judgment till the amendment came. Senate argued that now it stands, to that extent it stands overruled, modified. And then you had this double deduction under 1023C and 1046. Now that is not permissible after the amendments in Finance Act 21 and 22, because Finance Act 22 introduced an explanation to the 19th proviso. See, 1023C has got 23 provisos at the last count, and when you're counting it, one of the 16th proviso which was earlier deleted, you can't count it. If you count it, it will become 24. You're supposed to exclude that and count, then it will be 23 provisos. Then you have an explanation after 1023C, and you have a proviso to the explanation. That is not the 24th proviso, but it's a proviso to the explanation. So the explanation was inserted to the 19th proviso to say that for institution under 1023C, 4, 5, 6 and 6A is notified under 1046, then the approval granted under 1023C will be inoperative from the date of notification 1046. So you could not now claim both. Once you get on to 1046, you are automatically out of 1023C. There is no possibility now to say I am falling under multiple limbs 1023C, 1046 and 11. I will choose. No, 1023C and 1046. Now the moment you are under 1046, you are automatically out of 1023C. The 13(1)(c) amendment with effect from 1/4/2023, which was again Father Muller's case in Karnataka High Court, said that Karnataka High Court said that exemption will be denied only to the relevant portion, not to the entire income. If there is a violation or if you have applied the income for other purposes, Karnataka High Court said it will be only for that particular thing. And now the amendment makes it very clear that the proportionate income which is relatable to the violation would alone be denied exemption, because they have specifically brought in that to say such part of income as referred to in subclauses 1 and 2 in section 13(1)(c) and 13(1)(d). So to that extent, the observations in Father Muller now stand into the statute by virtue of amendment to 13(1)(c) with effect from 1/4/2023. Next you will have the benefit under section 11 and 12 not being available for a interested person under section 13(3) or explanation 1 to 13(6). How will you look into it? Because you had these cases wherein there was a refrigerator purchased, kept at disposal of the trustees. There are various case laws on that. But now they are wanting to bring about an end to that, to say, to bring about very stringent provisions for barring the use of the property or the income of the trust in any manner for the benefit of the author, founder, trustee, etc. Because the moment you violate here and you lose the exemption under 11, you are hit by 115 TD. So a minor lapse here would result in a major repercussion insofar as the registration is concerned and the accretion of income under 115 TD. These were by and large the amendments which were there in the last two finance acts. Now coming back to the two judgments on Ahmedabad Development Authority and New Noble Education Society. New Noble Education Society, the interesting thing is they have interpreted the word solely there. Under 1023C, there is a dichotomy you need to understand in terms of, it has also been explained in the Supreme Court judgment. Why am I saying dichotomy? 1023(6) dealing with education institutions talks about being solely for the purpose of education. But you have a seventh proviso to 1023C, which is permitting you to have a business activity and maintain separate books of accounts. So is it a dichotomy to say that 1023C, the primary section itself, is using the word solely for the purpose of education? The proviso is giving you a way out to say if there's a business, maintain separate books of accounts. Even that particular portion has been addressed by the Supreme Court in New Noble in para 58 to say that when they are talking about it, they say the proviso carves an exception to the rule and permits the trust to earn some profits, but the profits of the business have to be read as the education activity only and nothing there, which means the implication is that it should be only incidental to the activity under 1023(6). Only then the seventh proviso is workable there. Or else there is a dichotomy between how 1023C main section works and the proviso, that is seventh proviso, works. That is insofar as the proviso is concerned for 1023C. Surat Art Silk has been probably holding fort for many years now. 5-bench judgment in Surat. You also had a dissenting judgment even there, because the majority judgments held the fort. But even in the Surat Art, one thing you have to note is you had Justice Sen as a dissenting judgment, though ultimately it will not become the law because it is a dissenting, but you had diverse opinions even in Surat Art Silk case to say whether the primary term of predominant object being charitable and subsequent flowing back of money into the same activity would entail you to get the status as being charitable or not. That was the primary focus in, and that is held the fort. Now, because under charity now you have 6 limbs: education, relief to the poor, medical relief, yoga, preservation of monuments, heritage, and general objects of advancement of objects of general public utility. Lot of case laws dealing with it generally used to deal with things, 4th limb being general public utility. Now we have to deal it as the 7th limb after the amendment to this 2 subsection 15. How has this 2 subsection 15 traversed over years? You had 3 terms: education, relief to the poor, medical relief, and advancement of general public utility. Initially you had the terms activities not for profits. It came back. In Direct Tax Amendment Act 1987, they wanted to redo the entire aspect of 1023C and Section 11 by bringing in 80F. But by virtue of Direct Tax Amendment Act 1989, they brought back the old provisions. You had 13(1)BB standing for about 6 years, from 1977 to 1983, to say what is profit, how you could have done the business. After that, 2 subsection 15 underwent first change in 2008 when they brought in this proviso to say that you will not do the business activities. Then subsequent amendment to say 10 lakh, increased to 25 lakhs in Finance Act 2011. Then large trusts pointed out that the expenditure incurred or the incidental income will be much more. So in Finance Act 2016, they brought out these twin conditions that you will have these incidental activities permissible, but it should not be, it should be limited to the 20% of such receipts. Why is the emphasis on word such receipts there? You may have, say, for example, FD income, which is not from the normal stream of advancement of the objects. It is definitely not from a business or trade or commerce, but it is probably, you can call it as a transactional income. You have this money invested, you got it, transaction. That won't be computed for the purpose of this 20% receipt, because the 2 subsection 15 provides uses the word of such receipts. When they use the word 20% of the total receipts, of such receipts, in my opinion, it should be the qualification should be the total receipts as per which you're wanting to compute this 20% which is business, and not the other transaction incomes being FD interest and other things. So the 20% will be computed insofar as these two are concerned. Next, in Noble Education, they also made observations on incidental activities to education, providing hostel facilities, bus facilities. Yes, definitely part and parcel incidental. But the critical observations would be, if you are providing the same to some other students whom you are not imparting education, it will not be incidental to your activities. What happens in a situation where you are regularly providing a school, running a school, you are doing it, but you let out your auditorium to others? Whether is it incidental to carrying on the activities of education? If you are conducting a seminar for your own students, yes. If you are conducting a debate which your students participate, others participate, yes, it is. But if you are letting it out for other institutions to make use of the hall there, whether it will constitute that income will fall under the outside limb. It is whether then will you be violating the condition to say whether it is existing solely for the purpose of education is one thing. Next, should there be a receipt for you to say there is a auditorium, you have let it out to others. If you have charged, yes, you have received certain money, it is not existing solely. What if you have let it out gratuitously? You have not charged anything, but you have incurred certain expenditure towards that. Is that expenditure now incurred for the purpose of education along with your main object? It is for the ancillary activity that you have let it out to some other institution. You might not have charged anything from them is one aspect. If you have charged, you may be hit by other activities. If you have not charged, what happens? You have let it out, but you have spent for power, AC, you have provided other facilities, mic, all other ancillary facilities you have provided. Whether it will be termed as other activities, whether you lose the tag of solely existing for the purpose of education, whether will you look at education as scholastic only. Lok Section Trustee, Supreme Court, one of the earliest decisions was on that, to say education in terms of 2 subsection 15, what they're dealing is scholastic education, which is the proper schooling system and not getting the education by any other mode. You can get educated by life, by philosophy, by attending a discourse, by probably being a monk you can get education. You can travel and get educated. Those are not forming part of education. But in the new national education policy, thrust has been given on other activities also for the overall grooming. You have one Madras High Court in Tyagaraja Sabha's case to say that, where they interpreted to say, where they said, the observation of Supreme Court in Lok Section is to say that it's only scholastic education to be done is a very narrow meaning, and they wanted to extend it to music as well, to say it is forming part of education. But now, going back and forth, New Noble is talking only about scholastic education only. What have they overruled? Two decisions which were overruled were American Hotel and the Queen Society. What was the issue in American Hotel? What led to that? What are the facts there? It was a non-profit organization set up in USA. And it was a tax exempt status in US. It had a branch in India to comply with various regulations of agreements with the government for tourism and brochures and course development activities and software programs in the management diploma which they were offering. They were earlier under 1022, wherein the activity itself, if you are present for the purpose of education under 1022, which was there till 31/3/1998, you automatically qualify. There was no separate condition being laid out for the moment you are under 1022, you could have claimed the benefit of existing for the purpose of solely for education. After the removal of 1022 with effect from 1/4/1999, American Hotel and Lodging Association made a application under 1023C saying that, look, now the 1022 is not applicable. Within 7 days I made that application, permit me under 1023C. CBDT rejected it. But the conclusion of the Supreme Court was that the character of the recipient of income must have character of education institution in India to be ascertained from the nature of activities. If after meeting the expenditure, the surplus remains incidentally from the activity carried out, it will not cease to be one existing solely for the purpose of education purpose. In other words, they said, the activity will not mean absence of an educational purpose. It was definitely an educational purpose, and you are not saying it, the absence would not mean there is no educational activity at all, which was the American hotel and lodging. But in dealing with one of the other issues, what you have to bear in mind is Surat case and Lok Shikshana was on in the context of section 11. Queens was related to 1023C. Whether should we now understand that Lok Shikshana and Surat quoted in Queens were incorrectly quoted because it was dealing with a different subsect completely. We'll keep that. I've been instructed by the organizers that it's time for tea. We'll break for tea and come back. How much? What is the time? 15 minutes for tea.
Hi, delegates. Sir, my name is Venugopal, there with Altius Associate. Basically, we are an authorized consultant for almost all the leading banks, and for a banking, whatever the banking services is there, we do all these things and all. Especially for loans, OD, CC, and banking services. Please let us know any other thing is there facility in which way I can able to help you. Any queries, please try to contact, and the best services is being assured, other things and all. And special thanks to Mr. Srinivas sir and team for the giving the opportunity to offer this actually. Hello. Can you go? No, sir. Okay. And hi sir, dear all. My name is Venugopal, working for a company called Altius Associates, and basically we are associate for almost all the leading banks and NBFCs for the banking services. Requesting you to refer your clients for their requirement for banking needs, and the best service is being assured. Thank you all, and special thanks to Mr. Srinivas and team for the giving the opportunity, sir. Thank you, sir.
Coming back to New Noble Education Society, what was the main thrust it was on? As explained, what was the term solely? When you say, how do you interpret the word solely? Does it mean that we should primarily remain only for that, or is it something more? Or how do you look at it? Even the Supreme Court has referred to the books that we normally refer to, Ramnath Ayer's Law Lexicon and the Black's Law Dictionary, and explained the meanings through the same dictionaries which we also use in day-to-day practice to say it should mean exclusively and not primarily. That's a distinction they have made. Which means the object, among other objects, you cannot have education as one of the objects, or it can't be only primary object. It must be the sole or only object. Only then it will satisfy the test of being solely for educational purposes, independently existing for the purpose of education only. The thrust was on an independent existence only for the purpose of education and not for profit. Because American hotel and Queen's education dealt on a different footing, and both have been, I would say, overruled. And they have brought about the thrust that education institutions existing solely for the purpose of imparting education and its incidental activities. Incidental activities linked to education only are permissible under the new, I would not say guidelines, but this judgment would probably act as one. And one important facet which Sir also pointed out is that it applies prospectively, which means it does not apply even to pending cases. Because the Supreme Court observation is crystal clear on this to say, and I quote what the Supreme Court has said, this clarified that the claim for approval of registration has to be considered in the light of subsequent events, if any disclosed in fresh applications. This court is further of the opinion that since the present judgment has departed from previous rulings regarding the meaning of the term solely, in order to avoid disruption and time to give institutions likely to be affected to make appropriate adjustments, it would be in the larger interest of the society that the judgment operates hereafter. So, and hereby declared that the law will apply prospectively. So, which means, in my opinion, up to the returns filed as on 31/3/22, in my opinion, they will not be hit by, if any violations are also there, insofar as the term existing solely for the purpose of education is concerned, in line with New Noble. Coming to the Ahmedabad Development Authority, which dealt with 5 separate issues or 5 separate facets of organizations. One being the statutory corporations, the statutory regulators, for example, ICAI. What is the crux of the judgment in so far as ICAI, ICSI, and ICW are concerned? That they are definitely a parliament laws made by the parliament and a body of the parliament. And then education never finds a mention in so far as the CA Act is concerned. You are only prescribing the curriculum for the chartered accountancy course. Therefore, it is falling under the ambit of general public utility, and they are not hit by other things. But they have also come down and mentioned that insofar as charging of fees, etc., it may be for examination charges or books, seminars, conferences, they want to see what is nominal. Unless what you charge is not cost plus something more, which is nominal. What is nominal will be a question of debate always. Like, if you have to interpret the term substantial in terms of Income Tax Act, different sections dealing with different facets, the term substantial is different. Under 222E, if you are more than 10%, you will become liable for that because of it being substantial for that particular section. 13(1) violation, 20%. For transfer pricing to become associate enterprises, you need to have 26%. If you are wholly financed by the government under 1023(3)AB, by and large, you should be more than 50%, if not less than that. So what is substantial is always a matter of debate, or depends on the context in which it is used. Similarly, when they say nominal markup, Sir pointed out the Islamic society in para 156 of that judgment in the Islamic society, they say fees ranging from 6 to 15%. The markup is, the court said that it is reasonable and nominal. what is nominal for one institution may not be enough for another, but that's a debate for another day. But now how the judgment will operate, this is not said that it will not apply to the pending matters. For example, Ahmedabad Development Authority, the revenue appeal in this particular matter fails. But for other years which is pending before tribunal or high court, definitely the authorities have got the power to look into the objects and these illustrations what they brought out to say the 20% criteria or the general public utility and the applicability of proviso to 215 can be tested with based on application of the judgment here. And what recently happened in Hyderabad, the Hyderabad tribunal judgment in Fernandez Foundation is one such case wherein the reasoning that the tribunal adopted in relying upon this particular judgment was that the associate provided treatments to only 65 indoor patients for whatever amount at concessional rates, and it was a meager amount when it compared to total collections. So based on the applicability of reasonableness, to say that this probably I would say, they have said also that the free treatment or concessional rate was in less than 1% of the revenue in that case, which probably if you look into perimeter with how the Supreme Court decided VTU case, to say that whether they were substantially financed by the government to get exemption under 1023(3)(a)(b), their receipts totally the corpus of VTU was more than 500 crores and what was financed by the government was totally only 1%. Then the argument was proposed that, like in the case of Indian Institute of Management, government has granted land also to VTU of some 114 acres, and you look into the market value of that. Even if that was considered, the VTU's receipts came only to 4 to 5%. So therefore they said in that context, it is not substantially financed by the government, because they said only 1% or less than that is the grants from the government and rest is all built up by the university itself. Similarly, Hyderabad Tribunal in Fernandez Foundation have gone on to that facet to say only 1% of the total revenue which is there is based out of the concessional rate. Therefore, they have applied this judgment to say they will not have the benefit of the exemption. They have relied extensively upon Ahmedabad Urban Development Authority to say more than 20% of your receipts are not, it does not qualify the 2 subsection 15 category, and therefore they have dismissed the appeals of the SSC. So whether they could have applied this judgment here at all, whether was it in their realm to say whether you're looking at hospital charging commercial rates, and whether if it is under the primary limb, education, medical relief, relief to the poor, whether the 20% thing will kick in at all. Normal opinion, it should not, because as long as the other income or even business income is incidental to the main activities, it is part of the income generated out of the activities of education, relief to the poor and medical relief. And then it is flowed back into the activities, then you continue to get the exemption, and to that extent Surat Art still holds the fort, though it was dealing with a different set and it was dealing with only trust with general public utility. Now it's a hospital. There is that distinction made, but they have relied upon that to come to a conclusion that they were not entitled for the. And one of the argument which was advanced was whether the commissioner there could look into the documents filed before it for a period later than the 3-year period. And they said once you have filed it before the commissioner, nothing stops them from looking into it. And based on the data submitted by the hospital, they came to a conclusion that the fee charge was only 1%, and even the claim of the assessee that the remand should be given to the AO to verify based on Ahmedabad. In Ahmedabad Development Authority, what do they say? In, for example, sports associations from para 218 onwards, they stop short of saying it's commercial. They say that there is arrangement between BCCI and its associations, because BCCI does not own any stadium and other infrastructure. On behalf of the state associations, BCCI is doing the bargain to get to get overall a better price for the broadcasting rights and other things. And therefore, the court said whether the treatment by all the state associations that money received by BCCI is an infrastructure subsidy or not has to be looked into. They have stopped short of saying it is completely commercial, but they have given the option or sent it back to the AO as a second lease of life or second innings to say, come back again by applying the principles to say whether they are falling under the ambit, because they have said that it is not education. Cricket is not education as per that, because it is, again, it is in contradistinction to what Lok Shikshana Trustee says, that it should be scholastic education only. On that side, the AO has been given the power to look into it, even for statutory bodies and trade promotion councils. The judgment is that yes, they fall into general public utility. The appeals which were against them are failed to that extent, but the AO has been given an opportunity to look into the aspects year on year, which means for all subsequent years when it is pending, the AO will have the power to look into it. What happens for these non-statutory bodies? AirNet, NIXI, GS1, dealing with the barcoding and the internet domain. Though they were private organizations, based on the facts before it, the Supreme Court has concluded that they are charging only a nominal markup. Nowhere they have brought out saying the percentage there. Probably had they brought out the markup which is charged there, it would have probably been as a guiding factor to say, they have certainly agreed that the markup here is say 6 or 7 or 8%, and that may be the guiding force. But that number has not been brought about, but because there is a finding that it is based on nominal markup, and they continue to get the exemption. At the same time, the AO has been given, I repeat, the power to look into the aspect of it, whether they continue to perform the same activities and whether they continue to satisfy the conditions laid down into subsection 15, because it is mainly dealing with the 7th limb of advancement of objects of general public utility. Because there are various other issues that are arising out of this judgment. One thing would be to say, IIM, IISc, the placement fees or the incubation charges, what they collect. Whether will you say the IIM is existing solely for education, or now is it different? What is the nature of income? And when these organizations are letting the other companies, corporate companies to come into them, they charge something as fees for letting them into the premises and having the interview of the students. Whether that particular amount collected by these institutes would qualify as other income, or is it incidental to them imparting education? You know, sir has told me that he will take questions for more than an hour. So I will raise all that is possible from my end so that it's much easier. And one other question Mr. Keshwaya had during the course of the tea break was, in terms of the organization which has members and non-members, a trade promotion council or export promotion council, has distinct books of accounts for receipts from members and receipts from non-members, whether the mutuality will apply for transaction between members to be reduced from the total receipts, and in so far as transaction from members, only whether will you fall into GPU. That's the question, sir. Is the question right? That is one other thing. Next you have the, under section 11, if you look at it, it is subject to 60 to 63. Subject to section 60 to 63 is what section 11 starts off with, which means it is not sufficient if the property is held under the trust. If the income is settled to the trust also, that income probably, the receipt for the trust, if it is from the property held under the trust also, will continue to be. It's not that the entire property also must be within the trust. You can have a partial, ownership. It's not that a part of the property, but the receipt of the particular property can be in toto utilized for the charitable purposes. So therefore, if you look at para 162 of the Ahmedabad judgment, it talks about business to be considered as a property held under the trust. It should have either been acquired with the help of a fund originally settled upon the trust, or the original fund settled upon the trust must have a proximate connection with the later acquisition carrying on the business. That's the terminology they've used in para 162. And if you look at the inconsistency in terms of the usage of words in para 172, they talk about what is cost or nominal markup over cost and also derive some profit. The prohibition against carrying on business or service or business is not attracted. The quantum of such profits do not exceed 20% of overall receipts. On one hand, they're talking about the markup on the cost, and on the other hand, it is about the 20% of the overall receipts. So there is some inconsistency in terms of the usage of the words in para 172. Next, how do you look at the qualification of the word solely? Whether does it qualify the educational institute as such, or does it qualify the profit from the educational institute? It should ideally qualify the educational institution, because the institutes are established solely for the educational purposes. But we have to see whether the Supreme Court ruling to say whether it is qualifying the term education institute or is it qualifying the term profit. In terms of fundraising activities through entertainment events, charity dinner, whether nature of business, then how will you have the exemption available? Say, for example, Karnataka State Chartered Accountant Association. Otherwise, the income, all of us know, would be exempt. Normal course. Then, whether the charity dinners they conduct or any ticket to the event, a cultural event which is done, what happens to that? Whether it will be treated as business receipt or other activities. First of all, what is nominal has not been defined. On the other hand, to say whether these ancillary activities would invite the wrath and what is business itself. Different connotations are there. Because one specific word which they had used, I think in para 78 or something, which probably was to say business is etymological chameleon or something. So, tried to understand that a little in detail, but probably I would have failed in understanding as to the nature of how they use that term. So therefore, insofar as the clarification of the Supreme Court was concerned as to how they clarified saying the operation of the judgment is on one side. The issues which are arising are multifold, I have said it. Whether this particular judgment is it prospective or retrospective. They've clarified to the extent to say which appeals fail and who will succeed. Pending assessments, in my opinion, they may be able to apply to the pending assessments or pending matters in CAT, Tribunal and High Court. Sir will better clarify that for the benefit of all of us much later. Next would be, insofar as school is concerned, publishing and selling of textbooks, yes, it is definitely incidental to the main activities of education, because yes, there was in Noble also they have clarified that hostel facilities, textbooks, yes, it qualifies. But what happens in case of a hospital selling medicines in a pharmacy? You will have some amount of markup there, and probably the markup differs from each medicine and how they require. Whether that will be business income, whether it will, how will you compute the markup there? On that thing. So that issue will arise insofar as selling of medicines in pharmacy. Next you have the markup of percentage for activities which do not constitute trade, commerce or business or service in relation to them. Once you are not able to determine the nature of activity and you have ancillary activities around it, how do you determine the markup on those activities? Because now the entire thing hinges on, yes, you are charitable or not, solely for education, yes, Noble holds the fort. Sports associations, gone back for a second innings with the AVO. The GS1, Nexon, NIXTI and internet thing, they have said that private institutions but doing public good, having nominal markup, but AVO will verify. Seats Corporation, ICAI, ICSI, yes, established by Acts of Parliament. They are the only one empowered to issue curriculum and other things, but the fees charged for seminars, conferences and examination fees, books, etc. will be subject to the limit because they are GPU, the 20% limit will apply. when you have these issues revolving around, probably we have to see where it can be looked into. And in terms of the deemed universities, definitely it is not for profit, because by the university, when it is established by act of the state government or otherwise, you will not be entitled to say that you are for profit. So whether the university as such will be considered as existing for education purposes, or the institutions under that, under different categories which it functions, will have to be looked into there. And one issue which I raised in the earlier also, auditorium given to outsiders, and for a school which is giving bus facility to students is one thing. If it is picking up students of a different school which is adjoining, whether it will be CSR activity, if it is picking up students of a government school nearby and dropping them to the places, maybe at a nominal charge, to ensure that there is some discipline there. Whether the CSR activity which is being done will be looked into as doing an activity which is outside the ambit of not solely existing, because you are not doing it for your own students, you are doing for a different community, but it may be corporate social responsibility. How will this operate? And predominant object theory now probably will not be applicable for 1023C anymore, because of how the educational thing has been looked into. But Queen's, as sir pointed out, Queen's education, when they dealt with that, certain portions of it you will still be able to take it up. But insofar as how IIM was there, the case of IIM and VTU, similar to that now, how we are going to look into when there are a bunch of objectives, education being one of them, then and other objectives. If the other objectives are also charitable in nature, then there is no problem. But are you existing solely for education? Will be a question. But overall, then you may not be under 1023 say 6, but you may come under section 11, wherein you are overall under the charitable activities, charitable nature. You have education as one of the objectives, and you will come under 1023(6) there. So this, I think, these are the points which I've raised. Others, I think, as I said, we have 1 full hour for questions, and sir will take all the questions. Sir, please. Yes, sir.
Good afternoon, sir. Interest-free loan given by members of trust for the building construction and to be returned out of rental income generated from that building. How the tax treatment should be given for this, and whether it will be considered as charitable institution? Interest-free loan is given by all the members for building construction. Then out of rental income, that loan will be repaid back.
I'll take the answer from here. Major problem for lawyers is they can't speak when they are sitting. They're used to always standing. Please clarify your question. The institution is a charitable trust.
Yeah,
Is it registered under section 11?
correct.
Now, what is the activity of the trust? What is the object? What limb?
It's a temple.
And
It's a
don't worry, nothing will happen in India.
Yeah. Okay.
If you're a temple, nothing will happen in India in the present set of wool. In fact, I had the occasion recently, one faceless assessment, somebody in, I don't know where, had passed a huge income on a trust in Banshankari. So one of my friends said, what is to be done? I said, if they're going to charge tax to temples, it is not very unfair. We'll file a writ petition, don't file an appeal. In less than 2 hours, the judge said, nothing doing, all assessment quashed, please do everything. So anyhow, that is from the practical angle. From the legal angle, let us examine it. You are a temple. Where do the members come from if you are a temple?
they have got a trust formed.
They have a trust form. In the trust can be formed. Where do the membership come in a trust?
No, the trustees will also be giving the loan.
Trustees is different, members are different.
Trustees are giving the loan.
Okay, there is a trust in which the trustees are giving a loan. With that loan, an asset is going to be created, and the asset is going to be let out, and after some time, the loan is going to be repaid.
Yeah.
So, what is your question now?
No, whether that rental income is taxable and how that whether it will lose its charitable institution.
Because it has taken a loan.
Yeah.
No, it will not lose its charity. You can be rest assured. Rental income also won't come within the ambit of the proviso to 215. The rental income is it. So the question of, see, the point is, if you look at a very interesting observation, I'm not able to remember the para. In Ahmedabad urban, they have said, notwithstanding that it may be become rental income or other thing, it has a nature of business. Suppose, let's assume somebody is in letting out of business, like they build flats, offices and let out. In the commercial terminology, they are in business. But under the scheme of the Income Tax Act, Section 14, mandate should be assessed as income from house property because this is a rental income. Now, as far as the trust is concerned, letting out of property, if at all accessible, it is assessed as income from house property. So, the question of it having any nature of trade, commerce, collection of cess, etc. does not come. As far as the loan taken with the trustees is concerned, there is no prohibition under the Trust Act, to the best of my knowledge. A loan cannot be taken from a trustee or anybody else for that matter. You can. It is just like if you're going to a bank loan and paying interest, you are taking a loan from a trustee and not even paying him interest. But if you are paying him interest, you have to look at 13(1)(c) again, whether payment to a trustee interest. If there is no interest-free loan given from a trustee and ultimately repaid out of the rental benefits, in my opinion, such a trust cannot be denied exemption under Section 11. If you have problems, please come to me. I'll take care of it.
Okay, thank you.
There's an organization of food scientists, food scientists
Good, okay.
and technologists. It's a charitable organization registered under Section 12A.
Okay.
And basically the food scientists and the stakeholders from the company, corporate industry, like food manufacturing, packaging, food packaging industry, they are the members of the organization. The food scientists work in various organizations like all over India, like CSI institutions. They gather a lot of inputs during their research, and all these are collated and discussed in various conferences, annual, biannual conferences. Apart from conferences, they also publish technical magazines, journals. So these journals were published initially in-house and were managed by the scientists and members themselves. But then the inputs became so large and so technically descriptive, they actually outsourced, or rather the copyright was given to a publisher who had expertise to publish its organization, and they started receiving royalty. Is this royalty would be is taxable, or would it be part of the part of the activity that they are set out to? There's one more question on a different.
Let me answer this question. For that, I need some clarity. The institution is registered under 12A.
Yes.
Again, you are using the word members. Where do members come from?
Basically, the scientists. Basically, the scientists are the scientists of.
Is it a trust, society? Or
Yes, it is a society.
It's a society, and so it has some members.
Yes.
Each of the scientists are members of the society.
Yes.
Correct. With the help of corporate funding or corporate sponsorship or corporate association, these society gets some money to do some research program.
Exactly.
And the intellectual property of the research they do belongs to the society.
Exactly.
Subsequently, they are going to exploit the intellectual property vested with them by giving it to people other than who have sponsored or who they have sponsored, either way, and earn some royalty for they making some profits.
No, I would like to clarify here that this information is shared only amongst members and stakeholders of the thing. For example, if I'm not a member, I don't get to get the magazine.
Okay, that means the society is only publishing a magazine. What is the source of income? I'm not able to get clarity.
Basically, it holds food exhibitions. It holds basically food exhibition, meaning the technical side of it. It gets sponsorship for the exhibitions. It also has sponsorship fees for various conferences, and also has membership fee, initial membership fee, as well as recurring annual membership fee. These are the main sources of its income, apart from interest on fixed deposits.
The institution which you are referring to, the Society Registered on the Societies Act,
Yes.
it is not a statutory body. It is not asked like Indian Statistical Institute or seed certificate. It is not something. It is a collation of joining of a few people, both on the scientist and the industry which wants the benefit from them.
Exactly.
You have a lot of things to examine as far as this decision is concerned. The answer to your question will have to be on a minute microscopic examination, basically because you are evaluating and developing a product which you are giving it to your members to exploit, for them to make profit. Please examine whether it will be better for you to go under the principles of mutuality, under which case the society's income will be totally exempt. Examine whether section 12 should be surrendered and whether you should only keep principles of mutuality, and consequently you will get benefit as long as everything is there. You'll have only one problem on principles of mutuality, because you also told that there are interest income. In the case of interest income, in principles of mutuality, as you're not going to get it from members, that interest income will not be exempt because it is in the Supreme Court in Bangalore Club's case. If you want a foolproof suggestion, the idea is the society is to retain the entire assets that it has and then form another trust. The trust will do all these activities, pay the tax or claim principles of mutuality there based on how you structure the trust, and the surplus can come back to the society, but so that the interest income also will gain the benefit of principles of mutuality. If you do not structure your institution by bifurcating what is clear principles of mutuality, interest income is definitely not principles of mutuality because of Bangalore Club's case. Suppose you have a large balance of, let's say, 10 crore, 20 crore, 30 crore, giving you 5-6 crores. By converting to principles of mutuality, you will become worse off than what you are. So it is better for you to structure a two-tier structure. Wherever there is an ambit of clarity which is not liable for tax, keep it in structure A. Wherever there is an ambit for which there is a possibility of being hit by the proviso to 215, keep in structure 2. Keep the umbilical cord of management the same in whatever structure you all want, so that the tax incidence will be reduced. In my view, based on the facts I gather from you, it cannot be completely avoided.
Thank you, sir. I have one more question.
Please.
There's an organization, see, in Bandipur forest area, there are about close to 330 villages that are surrounded by Bandipur. A lot of people were getting in the local villages were getting into the forest for collection of firewood. So there was a conflict, man and animal conflict, and man conflict. In the sense, the forest guards thought they were poachers, and they were being shot. So who were gathering firewoods were basically the family members, including the children. The children were not going to school. Instead, they were going to collect the firewood for their daily livelihood of lighting their firewood for the cooking and other purposes. So an organization was formed, and there were a lot of deaths that went unreported around that place, Bandipur place. So an organization was formed where the whole idea of providing firewood, the whole idea of preventing them from going to forest was to provide firewood. So what the organization did was they got a Indian gas agency and started supplying the stoves and the tubes free of cost. The gas were supplied at a very marginal, with a very nominal margin to take care of the cost. This in the process, what happened was the children started going to school, and the number of deaths drastically reduced. So that being the case, and also the income of the family started going up because the men would go for work. So in the process, what happened was this gas agency became this agency, this institution was registered. It again a society was registered only for 12A, and it did not have ATG deliberately. And as a result, the income of the organization was only out of the gas. And of course, donations were coming in, which was actually taken care to fund the gas stoves and tubes. Now, in view of the judgment, recent Supreme Court judgment, would this activity get affected? This gas agency business, would it get affected?
The gas agency, which was run as a commercial venture, got converted into a charitable society, and this gas agency is making
gas agency was initially from the initial stages itself was a charitable activity. For example, the money generated out of the gas thing was used to fund the education of the children. In fact, there are about now 7 doctors who are qualified from the tribe, from the village. There's 1 chartered accountant, 7 lawyers, and about 14 engineers.
Okay, but gas agency has always been part of this 12A entity.
Exactly.
You are not putting it now.
No, we are not, it's been since inception, since 2003.
And your main object is to ensure these forest people are not got into problems.
Exactly, basically to protect the environment, because they were cutting trees, firewoods.
Yeah, in fact, I do not know in what way you got your 12A registered. Generally, when you register 12A, the department has the habit of giving under which limb of the 6 items they give. From what I hear from you, in fact, you will not fall within the limb of oblique of general public utility, and you should fall under the limb of preservation of environment, including watershed, forest and wildlife, and preservation of monument, place or object of art historic interest. So you will fall under environment, watershed, forest and wildlife. So consequently, if you are able to get in case your 12A says you are registered as oblique of general public utility, you must immediately file a detailed application to the officer and say you are not a person of doing, our whole object is only with reference to this. And once you get an endorsement from the commissioner that you fall within the other limb, the prohibition of doing business is not there. If you do not get it, the decision of the Supreme Court in Tribune also did the same thing. The Tribune was a paper. It was publishing newspaper, and then it was selling and then making some money through advertisement. That entire proceeds surplus which they had after paying salaries and defraying cost was used for charitable. The application was for charity. Then the Supreme Court in fact has made observation that any person can say, I want to do business, I want to do charity, there won't be any tax. I can, Infosys tomorrow can say, no, I don't want to do any more business. I'll convert my entire activity to only giving charity. So I should not be paying tax. So that they have deprecated. So the right approach would be from the nature of transaction and the nature of activities given by you, there is a very strong possibility, in my opinion, that you fall under preservation of environment and especially forest. And consequently, you will not fall under GPU. If you don't fall under GPU, all these decisions have no great application to you. Advice is accordingly given.
Thank you, sir.
Thanks, Shankar sir and Prashanth. It was a nice session. We had various inputs. I have a client who is falling under 1023C. But however, his gross receipts is exceeding 5 crores. So if at all it exceeds 5 crores, then the exemption is denied. Am I right?
Exemption, you have to take approval. See, up to a particular limit, the exemption comes automatic. Beyond that, you have to take an approval.
Approval.
See, my friend, my junior, didn't understand Children Education Society in a proper perspective. Children Education Society is a case where if an institution is running, let us assume, an engineering college, a medical college, a high school, a PU college, we said if you look at the method under which the registration happens for education activities, it activates by way of a registration required for each course separately. Each course means not each stream. The word used is stream. The correct is engineering, you have to get one VTU and All India AITU registration. Medical, you have to get MLMC registration. See, school means CBC, ICIC or SLC board. Pre-university registration. So our contention was, and in practice, each of these colleges are run by a principal, which again gets amalgamated into a trust. It's like Aditya Chinchagiri Trust has more than 500 schools running. It has some 100 colleges running throughout Karnataka. So each one has a principal, each one is a school by itself. So our argument was twofold. First we said each course, I'm running, the word institution was there. So if I'm running a PU college, I'm running an engineering college, I'm running a pharmacy college, the total receipt of each of the course must be taken, that particular. And consequently you should get benefit if it is less than 1 crore, that has gone. Now it is used the word aggregate of all the institutions, so that is how the 5 crore comes. That is for a automatic. Otherwise there is a method by which you can apply and take a permission at 1023C. The one which I did not succeed in Children's Education Society was, I went into an argument, I said, if you are running an engineering course, each year is an institution by itself. I say civil engineering means first year civil engineering is one course because I had to get AITU approved for first year. Second year is another course. Each one is an institution by itself, and consequently, as long as the amount did not cross 1 crore for that particular year, I am entitled to benefit for everything, is what an argument which the court negatived and said we will take not civil engineering, engineering as one item. My first thing was engineering cannot be taken as one. The department contention is you must take engineering, pharma, physio, all put together and see whether it's 1 crore or not. There we succeeded to the extent of bifurcating between school, colleges, engineering college, physio, pharma, MBA, etc. But the contention which I took was that in the engineering course, each course is an institution. In each course, each year is an institution, was negative. So as far as you are concerned, that 5 crore is with reference to that aspect. And but I think in my personal view, after Noble, it is much more apt to get into 11-12 exemption from the point of view of education, because you all don't come under GPU, you come under a specific thing called education. It is more appropriate for you to examine the possibility of getting 11-12, fall under 11-12-13, which will be much, much easier than 1023C after the decision of the Supreme Court.
Can we plan a demerger in that case, like where it is exceeding 5 crores? Maybe like a demerger of that kind.
That's what I told in the earlier answer. You can always have multiple trusts and have an umbilical trust, and then you can, each trust can be less than, you can have a society.
Yes, sir.
The society can form 10 trusts, and that each trust will be a institution by itself. Yes. The management of each of the individual trust must be kept in such a way they look like arm's length from the main trust, and then you can start funding from the main trust, and then give back to the main trust by way of donation, the surplus if any. Definitely you can make each institution separately. Like for example, if you are running, let's say 5 schools, you can make each institution a school separately, and then you can get an exemption.
Yeah, thank you, sir.
Sir, we have a trade association for the benefit of its members. It's an AOP, basically. It has got members. So normally the AOP maintains the proper books of accounts separately for income from members and income from non-members. Income from non-members basically interest from bank deposit, and sometimes it gets sponsorship for conference and all that from corporate entities. Now, so for those things, the AOP has been paying taxes. For a contribution from members, we are claiming exemption on mutuality basis. We have not gone for earlier registration consciously because we have got a better shelter of mutuality. Now, when it comes to conference and all that, sometimes they get specific contribution from non-members for sponsoring, say, like gift to the members on the occasion, or sponsoring catering expenses and all that. Now, can we claim these expenses, catering expenses, gift expenses, against the gross receipt what we have received from non-members?
A little more clarity, please.
That means we are getting...
you are a trust.
No, say AOP.
But what is your AOP means? How did you come into existence? You may be filing.
It
in
is
the state
registered as a society under Societies
Okay,
Act.
you are registered as a society under Karnataka Society Registration
Karnataka
Act.
Societies.
Okay, what is your main activity?
It's a trade association for the benefit of its members, to benefit its
Do
trade.
you have a conference hall?
No, they take it on hire. They don't have their own conference
You
hall.
don't have a own conference hall. Okay, you take a conference on
The
hire.
source of income is, contribution from the members.
Correct.
One-time contribution and then sometimes recurring contribution.
And whatever is contributed from members is claim exempt.
You are claiming exemption, yeah.
And whatever is not with reference to members is claimed as
Yeah.
taxable income and paid tax on the surplus.
Correct.
So what is the exact query?
Exact
You are
query
doing very
is-
correct thing.
Correct, sir. Now, the gross receipts, what we are receiving from non-members during the time of conference for sponsoring, catering and other gift to the members, the expenditure is for the members. So if I take it as expenditure, if I take it as an expenditure members, then I have to pay tax on the gross amount. Actually,
Why do you take it as expenditure of members? If the conference is held,
Huh.
both members and non-members are.
no, so non-members will not be there. It is for the members only conference.
But sponsorship comes. Okay, now your point.
Sponsorship
Now
comes.
I understand your point.
Yeah.
Let me explain to you what I have understood.
Now, for example, yesterday we had a laptop bag here. That bag is sponsored by some outsiders, some non-member corporate entity.
Okay.
Whereas the
It-
bag
it
is only
it
for the members.
It is somebody sponsors a laptop, which you utilize it for the members.
Members.
So the point is, instead of giving a money to you, if you had given your laptop to the members and distributed, what would have happened? Instead of somebody giving you a laptop bag, they
Correct.
come and give you not the money of 1 lakh to buy some 100 bags.
They were given money.
Instead of giving money, if they give you 100 bags, what will happen? Only testing the proposition. You always test a proposition by putting questions like this. What happens if they give you 100 bags instead of giving you 1 lakh, and you are giving it to all your members? Are they going to tax you?
Obviously, the money received in kind from non-members allowed to pay tax.
It came from non-members and it went.
Yeah. My question is, I wanted to claim the benefit of expenditure as an association.
You can claim it. I want the answer from you. That's why I'm trying to nudge you to give the answer to me. According to what is the prohibition in you claiming? You got money you spent for the members. I'm not giving the correct answer. I'm only trying to elicit individual thinking processes. You got money from somebody. You are a AOP. You are a society.
When I get the money from the non-members,
You are getting from a non-member some
I have to
sponsorship.
pay tax on that, no, sir.
You have to take on that. Like for example,
Now,
bank.
my question is, can I claim the money what I've spent to the members, that expenditure, can I claim against that income? Is my
You
question.
cannot claim again. That's what I'm saying. Bangalore club is what?
Yeah.
The club runs. The club is actually loss. But it got interest income from a non-member. So they say you pay tax on the non-member's income. That is why subsequently Bangalore club has arranged its affairs in such a manner that how you collect the money and how you distribute in a manner within the framework of law. If you are collecting some sponsorship from X person and simply distributing it to members, you are liable to pay tax on it. If the sponsor says that I want to give one thing to all your members, you write a letter, he writes a letter and he distributes it, and you give an audience in your conference, it is not taxable. It's all question of how you structure your activity. There's no surplus on it, correct?
Yeah.
You collect 5 lakhs, you spend 5 lakhs. Against sponsorship, you no doubt incurred the expenditure. You incurred an expenditure.
Correct.
But you incurred the expenditure on behalf of a member.
Correct.
So naturally, the tax liability will come on the sponsorship amount. Like for example, you take Bangalore Club conducts a New Year night. It gets sponsorship of 25 lakhs. It spends the entire money only in its members. It'll call one artist, it'll give you all food free. Everything comes only to members. As long as the linkage between the expenditure and the sponsorship income has no direct nexus, you cannot claim it.
But if there is a link nexus, then I can claim.
If you have a nexus, you can claim. How do you get the nexus is what you have to structure your organization.
Yeah, that we can plan.
Possible. I'll tell you outside the office system.
Thank you, sir.
Speak to me during lunch. Something can't be told.
Practically, we have one more issue, sir, while filing the return of income of trade association. Now, as per the latest 2020 amendment, Now, if you have a negative, excess of expenditure, in case of excess of expenditure over income from members, and you have a surplus from income from non-members, and I can claim 50% of this minus figure as per the 2020 amendment under section 44A.
Okay, tell me.
So whereas practically in the ITR form, the e-filing format doesn't support us. There is no way we can set off this negative against the surplus income from non-members. There is a practical problem. Is there any solution? Because if you see the ITR, you can, deduction under 44A, it's not there in the ITR.
In lighter vein, I'm not a practical man. Okay, I'm only wanting to find fault with commas, full stops, semicolons, and things like that. In fact, a lot of professionals have come and asked me, the income tax form does not support a lot of things. Somebody told me I got ATM deduction, I can't claim both, I got 150 tax, so many things it
No,
doesn't
here
support.
also in the trade association, we are facing the problem.
All you have to do is,
See, we have ITR 5 for AOP. The problem is, there it will ask for share of members, whether the income is determinate or not.
the only suggestion I give
There is no determination of, in this case, see, the income remains with the trade association. There is no distribution at all. Whereas in the farm, it will ask for the member share. If I give, it is a wrong information. If I don't give, it will take it as MMR. Then I will be liable to pay tax at 30% plus surcharge 37%, education 4%. They will. This is the practical problem we are facing. When I raise this, when I raise this issue, what I did is I got a demand. They levied the tax with the MMR. I did not apply for rectification online because I knew that when I apply for rectification, automatically it will come back with the same demand. They will not do anything. Then I went to the ITO and I asked him for a manual rectification. I explained him this is the issue, this is the problem. There is a problem in your ITR. It doesn't support us, a trade association. It lasts for share of member, all that. If I give, it is a wrong information. If I don't give, then it is taking for MMR. He says he's helpless.
so you come to me, I'll get you an order. To get him. Anyhow, coming back to it, this is a freak. I'm not able to comprehend your exact problem in filling ITR, but I'm able to understand that there are certain fields in the ITR which doesn't support the actual reality of the transaction which an entity does. Similar to you, a lot of people have come to me asking for various other things in ITR. I have told them 3 advices. Advice number 1, file the ITR to the best extent possible, the nearest extent possible as far as you are concerned. On the same day of ITR, go to the portal and raise a grievance and keep a acknowledgement that I am unable to fill the column because your field doesn't support the line of thinking. File one grievance petition immediately in the portal. Next day morning, with a detailed covering letter and the correct return, file a manual copy. If you file a return, they will not take it. Write a letter and enclose the return, correct one, with the letter and file it with your judicial officer and keep it. And later, if they don't rectify it, you have a very strong case to get a mandamus for them to rectify in your position.
Thank you,
These are
sir.
standard 3 advices I have given, not only in your problem which you are facing. There are several such problems in filing an income tax return. Every day somebody says it's not going, sir, that is not coming, sir, that field is taking, it is becoming MMR. In some place you are supposed to pay 7.5% tax. If I fill this field, that field is going. If I fill that field, this is going. Initial teething problems. I am sure a good officer should rectify it immediately. Make a petition to the commissioner. Let us see what he says.
You also have an old Supreme Court judgment, Konchamo Amal versus CWT, to say that a form of return cannot be ignored. In this type of situations, as sir pointed out, the moment you make out a case that you could not fill up something due to the inadequacy of the form, further proceedings insofar as extra demand or penalty cannot be levied on you. 124 ITR 625 or 125 ITR 624. Konchamo Amal versus CWT.
Thank you, sir.
Hello. Sir, one trust is there. Late filed the audit report in 10B and notice given by CPC and the reply was not rejected by the CPC, then demanded the taxed at the gross income, not on the surplus. No provision is there in the website for condonation of delay for late filing of the audit report in the income tax website. No, already passed the assessment order under section 143(1) demanding the tax. So what to do, sir?
File an appeal and move a condonation for the commissioner, asking him to condone. He has got some powers to condone.
Correct,
If he doesn't exercise his power, then on that order file a writ petition and get it condoned.
We have to, CIT appeal we have to make, and
Not CIT appeal, you should file against 143(1) denying you have to raise a ground saying that the appellant denies himself liable to tax. That is, you're denying. 143(1) is a little strange way of filing an appeal. You must deny yourself liable to be assessed to tax in the manner in which they have done. Take a ground, fill it up, and then file a statutory appeal. And then at the same time move a application before the 12A means before the jurisdictional officer to say that this I have not filed a form, please, form audit report, please condone it. And especially in the case of Form 10 and audit report for trust, the condonations are much, much easier.
okay, sir. One more question, sir. When we have to get the trust audit report in 10B, if the income is below 2.5 lakh, is it necessary to get the audit report?
Honestly, I don't know the answer. What is it? Prashanth?
In 10B, nowhere it talks about, it is insofar as your, computation and taxability, and when you fill up the form, it says income maximum not chargeable to tax.
Correct.
But insofar as you're appointed as an auditor to certify on the correctness and truth and fairness on the expenditure of income or excess of expenditure or income or expenditure or excess of expenditure or income. So I don't think you can say that you will not do the audit. It is not like a 44AB to say a threshold limit.
Correct.
If you're wanting to claim exemption under 11 and 12, it really doesn't matter whether you have 2.5 lakhs or 2.5 crores. Your entire income is getting exempt under section 11.
Correct.
By virtue of that, if you're saying this is surplus,
Yeah.
it is excess of income over expenditure.
Okay.
You will carry it forward in accordance with law, 85% and 15%.
Okay.
So, they are not doing an audit or something. If you're claiming, if you're falling under 11 and 12, you will necessarily
10B
follow
has to be
the
filed.
rigors there.
10B has to be filed.
You will have to, if you're wanting to claim the exemption under 11 and 12, filing of an audit report is mandatory.
Okay. Okay.
Look at Nagpur hotels.
He's saying it is surplus. If the surplus is 2,50,000, he has to. Yes.
Sir, one small clarification, sir. In that 143, 10B, the delay in filing the audit report is condoned by the commissioner. The delay is condoned. That delay in filing the audit report is condoned, but still, what is the next procedure how to proceed further, sir? 143(1) demand has been raised.
Go to the assessing officer and ask him to rectify it now.
Okay.
Yeah,
But he
manually
says
file.
it is not in our jurisdiction, you have to apply
Then
to
what you have to
CPC.
do is, you keep writing what is known as a Monday letter. In our office, we have a procedure called Monday letter. Every Monday, we'll write one request letter to CPC. Again, let them keep rejecting, we'll keep writing. After some time, they'll get fed up and they will send one thing after 10 times. Your case is transferred to jurisdictional officer. It automatically comes. Try that habit.
Thank you.
I wrote what I told on chartered account, every Monday you write one letter. Monday morning you'll write, Tuesday you'll get one rejection letter. I said, don't worry. Next Monday you write, one more rejection. After some time they'll say, what is this fellow writing? He probably will go to court. No, your case is transferred to judicial officer, please go to him, they will say.
Sir, one more small.
Practical, I'm saying.
Okay. One more
Legally,
small.
no issue.
We applied for registration under section 12A.
Okay?
Even after 3 or 4 months, we have not received any reply. Whom should we approach, sir? Or we should wait for 6 months or what?
Very practical question. See, you applied in Bangalore,
No, I am from Tamil Nadu, sir.
you applied in Chennai or
Yes.
Madurai, wherever it is. Go and meet the concerned commissioner. After all, at the end of the day, now Supreme Court has said very clearly automatic registration all are not there now. You have to, even in Karnataka High Court in golf club, they did not give in, they took it as deemed registration. Karnataka High Court reversed the Karnataka golf club matter. So the best way would be to practically go and tell the officer and meet this additional and sort it out. I'm sure they will do it. There is a time limit, they are bound to do it. And even otherwise, if they don't do it, your registration will always come from the date you applied. From that year, it normally they are giving. Assuming it's late also, you will get it from the time, for the year prior to the year in which you applied, you will not get it. But subsequently, you will get it. Yes, it's a question of persuasion and perseverance at the local level. You must be happy that the officer is not doing the work. No? Annadata Sukhi Baba, you are getting one work.
Okay, sir.
If he does off the work promptly, all of us will not be there at all. Entire CA profession will get out of the system. If the department does perfect thing as per the act, none of us have work. So I always keep telling the court whenever I argue, I'm more than happy for my friend, because if their officers don't make mistake, I don't exist. It is only because they kept making mistake, the commissioner doesn't agree, tribunal doesn't agree, now we come to you. If everybody does it as per the act, there's no work for professionals. At least the taxation field, auditors may, people who are doing audit may have some work because of the compliance under the company law. If the income tax department functions perfectly the way we expect, there is no requirement or existence for any professional. So we should always be happy and bless the income tax officers. Whenever they make a mistake, you must be very, very happy.
That's true, sir.
Very lighter vein, I'll give you one example.
One more thing, sir.
Only 1 minute, one joke. We need something to lighten the atmosphere of an attack on me on various trust questions. What happened? Long back, there was a search. That person was being harassed like anything and forced to give a declaration. 1986, I just started my practice. So, 83, 84, I started 86. One of the earliest search cases I handled. Next day morning, through some very good senior chartered accountant, came to my boss. My boss said, I am now not doing all that, you go to him. So I then wrote one letter and went to the additional and told him I am retracting. He said, retracting against me. You know who I am? I don't know, sir, who you are. Except I see some name in the outside. And I am not here to worry about what you know, what you don't know. You are a chartered accountant? Yes, sir. I will write to your institute and get your institute license suspended. No problem, sir. I am also a lawyer. So you have write to Bar Council also. I have one more alternative practice. Passed my exam. Then I called the client. I gave, in fact, the case was so interesting that the person was in Mysore Road. He was brought to Sangam Theatre near Majestic, and I was given to understand, I am not a witness to it, that he was shown a gun and took a signature in front of that overbridge in front of Nartaki Santosh Sapna. Those were very famous theatres those days. We retracted, and happily we kept quiet, kept on litigating. And in the meanwhile, he had given a check of 25 lakhs those days. I told him to bounce it. And then we made some prudent other investments. And we litigated from 86 to 2007. And in 2007, originally they put income of some 20 crores, 30 crores, oh, we'll teach you a lesson. It's a very normal thing. And ultimately, what happened was, it came to some 10 lakhs or odd in 2007. The 25 lakhs investment had become 200 crores. So I told him, go hunt that man who raided you. Tell him department will not give you any retirement benefit and all, but I want to give you. Basically because, but for you, I would not have gone and got into all these things. So you are the greatest investment advisor to me. Because of your search, I succeeded. So that is why we as professionals should never feel the officer is doing wrong. He is doing for our welfare. No, in my office, my juniors, Madhu, Prashanth, I tell them, sir, ಹಿಂಗೆ ಮಾಡ್ಬಿಟ್ಟಿದ್ದಾನೆ ಸರ್, ಏನು ಸರ್ ಮಾಡೋದು? ಎಷ್ಟು ಸರ್? ಒಳ್ಳೇದಪ್ಪ, ಒಂದು ಕೆಲಸ ಬಂತಲ್ಲ, ಮಾಡಪ್ಪ, ಏನಿದೆ? Some clients will pay, sometimes you'll get experience, all that is another thing. After all, he has done some work. In his wisdom, it is correct. At the same time, I want to share a very interesting thing as a corollary. One matter was confident that I'll 100% succeed. One officer took on, in my opinion, the most absurd proposition. I lost before CIT, I lost before tribunal, partially succeeded before High Court, lost the balance before the Supreme Court. And that proposition, which I felt as a young person was absolutely absurd, has been upheld by the Supreme Court. Then I was feeling very dejected when I came out of the Supreme Court, losing that matter, which I felt genuinely that that decision is not correct. So I met one of my very senior good friends in the Supreme Court. I told him what happened today. Chief Justice Kapadia's court. He said, don't worry, Supreme Court is not always correct. They are also wrong. But only thing they are final. So you have to accept it and get going. Nobody can say Supreme Court is correct. They are also wrong. That is why 2 bench will go to 3 bench. Now, so 2 decisions of Supreme Court have been reversed by Ahmedabad. So these are not final. They are final as far as the trustee is concerned. So relax and go. I'm talking 20 years, 15 years back. Sir, sorry, some question.
Sir, in FCRA portal,
FCRA, okay.
FCRA, there is a change in the trustees. We filed that change in the trustees. But that portal, I mean, after that, there is no reply for that or acceptance or denial, nothing is there. Now there is again another change. The change has to be submitted within 30 days of the, within 30 days the change has to be informed to the FCRA. But now we cannot, we cannot apply again because the earlier change itself is not yet approved or denied. And now, in the portal again, we are unable to apply. I took the screenshots and sent it to the FCRA also, but still now there is no reply for anything. What shall we do, sir?
You are giving me one work. Give me the paper, I'll get a mandamus for them to correct it. It's a very strange thing. This problem with government system is that they sometimes don't work or they work at their own convenience. See, the only remedy available, because if it's income tax, I'll keep on telling you the Monday letter. You see, the FCRA is a major problem basically because you have to get foreign money for the client. And unless it is approved, then the SBI also in Delhi, who you would have opened an account, will not take it. You have to persuade it, send a letter to them, write a reminder letter, and tell them we have subsequently changed, we are not able to upload, and then keep on writing to them. As long as your bank account is not blocked, you don't need to go to court. The moment your bank account is blocked, then you have a cause of action. Only thing you have to persuade them, that's all. But please make sure you write regular letters, not like once in a blue moon. Write regular letters at least once in a fortnight, and keep your back records in a very perfect way.
Thank you, sir.
Sir, there is a sports club, which is registered as a society, and it is also registered under Section 12A B of the Income Tax Act. And from the sports activities, it is mostly in the loss, and it is in addition to the sports activities, it is having some restaurants, spa, swimming pool, and a bar. So from those activities also, there is a nominal profit or there is a loss. So in most of the departments, it has a loss, but only 2 departments, it has a profit, which is the admission fees, one time taken, and there is a interest income. So all the time, department is denying the 11 and 12 exemption, and it is saying, okay, you are charging huge fees and all other things, but it is ignoring that most of the departments, it is having loss only. So my question is whether this bar, restaurant, spa, swimming pool is incidental activity or it is a business activity. So it will be covered by the 20% limit or not. And second is the admission fees, whether it is a capital nature or it is a revenue nature. And can we treat it as a corpus donation?
3 questions.
No, I have other questions also.
It's connected, you tell me everything.
So, separate books of accounts we are not maintaining in the past, but from the next year we are starting separate books of accounts. But in the books of account there is a separate account for the each activity. So, from the books of accounts we can find out the income of each department, restaurant, spa, swimming pool, and sports activities, everything separate details are available. So my next question is, can we stop all these businesses, and instead of that we can give these things on rent, and we can have some nominal rental income and stop all these business activities? That is my next question.
Over.
Yes.
Thank No. First question. You must put yourself as an income tax officer. You must be the ITO. Will you give 11 status for a person running a bar? You said bar. Can bar and charity go hand in hand? First question to yourself you have to ask before you do. Can bar and charity go hand in hand? I don't think so any person running a bar can ever claim charity. Bar can never be charity. Okay. Other than Bar Council of India. Okay. Okay. So we are charitable. Okay. So the regular bar which all of us know can't be charitable. So you need to structure your thing. The major problem is you will be able to let out all these things to outsource entity and claim rental. Whether the rental will be used only for your members or non-members have to be examined because you said you are a club, sports club. So there are some issues involved in it. And insofar as bar is concerned, you will have another extra problem. You can't outsource it because the bar license will be in your name, and every time that outsource fellow buys liquor from Karnataka State Beverage Corporation, TCS will be credited to your account.
Yes.
So naturally, it requires a lot of thinking. And if you want a real solution, please get in touch with me after next Friday. The very special session on this for all clubs I am conducting by Wednesday. Very important, deeply, more than 20 clubs have the same problem. How to outsource, how to change bar, and things like that. So you take my number. The outcome of my investigation, examination, evaluation with some 6 or 7 senior professionals is likely to happen coming Monday or Wednesday. I will share with you what decision we have taken, how to structure your organization in such a way that you do not lose benefit for the exemption in respect of interest income and, if possible, members' admission fee. You got some clarity?
Friday.
I have no answer now myself.
Okay.
No problem.
The one GPU, which is a registered society as well as enjoying a 12 AB, conducts international exhibition, which is participated by both members and non-members. Because of this denial of this predominant object and other things in this decision, and they have clearly said even conducting trade fair is a business activity. Can we bifurcate between members and non-members and treat members as between under concept of mutuality, or whether I will be hit by 28 subsection 3 if I do that?
What is 28.3? You have to teach me first.
No, they say that income derived by a trade or profession from the services rendered to its members, that is taxable, they say. So if I do this under...
Tell me which section?
28, subsection 3.
Section 28.
Yeah, 28.3.
Okay. Income derived by trade or professional or similar association from specific services performed for its members is income. Correct.
Yeah. No, because there's services, now they say it is services in connection with business. So if I bifurcate between members and non-members and treat income from members as under concept of mutuality, will it come in conflict with this 28.3?
28.3 is only what is called an enabling section.
Yeah.
All of us have to understand 14 classifies the various heads of income. Income from business is under 28.
Yeah.
You must have to look at the first wordings of section 28. How it reads is, the following income shall be chargeable to income tax under the head profit and gains of business or profession. The charge is on that income. The exemptions of mutuality comes under section 4. So merely because it is it is illustrated and enumerated in section 28, it is income, chargeable. What is chargeable here? You may get exemption under 80J, 80I. So chargeability is one thing, taxability is another. So as far as you are concerned, if you are able to make a proper record, mutuality principle is definitely available. That is precisely the Bangalore Club's case. In respect of activities pertaining to members, you please take the exemption. What does not pertain to member, you pay the tax. In fact, if you can talk to your colleague, Madhu, you know him well. there is a decision of one Vijayanagar club in which which I only argued in the High Court, whether there is a compulsory mandate that you must claim mutuality. It was advantageous for us for 3 years not to claim mutuality because of the activities of the club resulted in the negative thinking. So then the High Court, up to ITAT, they said you can't choose mutuality 1 year and another year like that. Ultimately, High Court said no, each year is an independent assessment. I can choose to claim mutuality for a few years and not for another years. And they gave me the benefit and removed that some odd 20 odd 30 odd lakh tax. So that is how it is. I think you are entitled to it.
Thank you.
I can't answer question from you and all, man. You can't ask questions and all.
No.
We'll ask we're going to put one
Sir,
Hiroshima, Nagasaki.
There is nothing which you can't answer under the Income Tax Act.
I'm not
Sir,
fishing for any compliments.
That new noble case has very clearly distinguished what is the main activity or principal
Dominant.
activity. Okay, solely for the purpose of this. If the object is solely for the purpose of, say, education, is it mandatory that the education being the object should be done by the assessee himself or the activity? Just to illustrate that, say our own institute, CA Institute, conducts its examinations in various centers, which are all educational institutions. In order to enable the process of an examination, which is also an object of education, they also let out their premises for carrying on the activity of conducting the examinations. Will that also qualify as solely for the purpose of education for the assessee, though they are not directly the persons who are actually conducting the examinations?
That's it.
So, yeah. So
Answer is very simple. Please read the decision of the Supreme Court in Adityanar.
Adityanar.
Adityanar Education Society said, a trust which finances education society also is education.
But is it not overruled because of the new Noble's case? Because
See,
there
the
is
point,
a specific...
new noble restricts itself for solely.
Yes.
With reference to 1023C.
Should it be by the assessee himself or the
1023
overall object?
1023C is one thing, but 1112 is available to you. Even you need not be solely, because Section 11 doesn't use the word solely.
Yes.
So
No, if we come under
11 problem,
1023C6.
11 will happen whether it will come into trade, commerce or business.
Yes.
Actually, your case will be a one whether it hits by Ahmedabad urban authority and not by Noble. Noble is very narrow decision because it deals with only 1023C. It has not dealt extensively. My friend brought some parity of reasoning from 11.4a and brought it an incidental and 7th proviso. That is one very, very loud, far-fetched thinking. In reality, nothing prohibits you from coming under 11.
Yes.
And once you come under 11, you need not solely be for education. In fact, funding and education itself amounts to education is what Supreme Court has said in Adityanar.
Second is that given that overall plethora of changes, including the 11.7 and all, is it advisable for most of these who are covered under 11.12 or under 1023C to maintain their books of accounts on cash basis, unless it is hit by Section 8 company, which is mandated? There again, you can qualify that. But then if you follow the cash basis, most of the rigors might be out of the way.
I walked with you for 15 minutes during tea time. You asked me this question, I have answered it.
No,
You cannot ask this once again.
No, it is for the benefit of everybody, sir. It's not only for me.
Later, don't take it so seriously, Suresh. I took the liberty of the very same question he asked me when we were walking on this 11.7 cash basis. Then I explained to him that there are some mandatory 11.8 company, Section 8 company, societies all have to mandatorily maintain accounts on mercantile basis based on the respective statutory act. See, this 11.7 with reference to is going to be more than the maintenance. We can always maintain on cash basis because there is no prohibition unless there are institute guidelines, mandates that the trust should maintain in a particular way, which I am not familiar. You all have to educate
All
me on
accounting standards are mandatory for them, but insofar as you are able to put that as a note and qualify that, there is a compliance of that. So
no, you don't need to qualify because under the Income Tax Act, it is not mandatory.
No.
Income tax audit report, you are not saying like company law,
Yes.
so and so audited statutorily, I am doing this 44AB. Income tax has only one 10B, what is that form? 10B you have to file. In that there is no requirement for you to put any note or anything. Sometimes don't educate the officers. You give a note saying that you are following, in your notes to account, you can say I am following the cash system account, there is nothing wrong in it.
Coming to this, accounting standard 9 specifically warrants accounting of income by all the people on accrual basis. So So to that extent, if it is not complied with, you need to sort of put a note and qualify that.
I maintain my books on cash basis. I don't put any notes.
Coming to this again, question is that, as was told by Prashanth also, if the income is accounted on accrual basis and a fair portion of the income is not received, and if it is written off and it's not likely to come, for example, it's during the COVID times, many of the students were affected, their parents were affected, the monies are not going to come. If it is written off as bad debts in the same year because it's not going to come, will that be treated as an application?
Yeah, it will be treated. 100% will be treated. You can't
Because-
even if you feel that you are going to get it, you can still write it off. If you have got income that year and you have problems to adjust your account, you write it off this year and show it as 41-1 next year.
If it is not written off as bad debts, but it is provided for provision for bad and doubtful debts,
Difficult.
it won't come. The reason is that in the income tax,
Notwithstanding the fact that 3616 and 3617 are not applicable to trust in computation because we don't compute income for a trust under section 28. Except because of the proviso, what happens, we have to see the computation part of it. In reality, the accounts of a trust are always computed on commercial principles. The decision of the Karnataka High Court in St. Anne's Education Society.
and also there is a CBDT circular also of 1967 on that. Now, the reason specifically is in the ITR in relation to this, there is a specific column to say provision and bad debts, which needs to be reported upon. So if moment you report upon that, then automatically even though the bad debts is allowable under the commercial principles, by way of 143(1), the CPC is automatically adding it back, and of course matter of appeal and things like that. But
All of us have to collectively write to the board to make the software through a chartered accountant and not through engineers.
thank you, sir.
If chartered accountants start applying their mind on the income tax portal software, it probably will come out a better way.
Sir, an educational society provides housing facility to its teachers and collects some rent. It also sells uniforms. It also runs a canteen.
Runs what?
Canteen.
Canteen, okay.
Whether that fall under this 20% bracket. All these receipts.
As long as you are going to use it only for your students, in my opinion, it will, I don't think so, it will fall within the permission of business at all, according to. After all, these are all absolutely, it is a part of education system. The point is the interpretation of incidental by noble cannot be stretched to, tomorrow you'll give uniforms to the students. These are all not businesses. The essential ingredient of today's education. Those are the areas which probably will experiment over a period of time, and after some time noble will get diluted by your client's name, case in the Supreme Court, and say these are all can be treated. Okay.
Thank you.
Aliyogappa, there somebody wants.
Sir, an AOP, which is registered under the Karnataka Societies Act. So, whenever they have changes in their memorandum or in the articles, do they have to file the same with the societies or, let's say, the financials with them? Because I've never come across, I've never read, they have to
Every
file
time
this.
you make a change to a registered society, you have to inform the Registrar of Societies under the Karnataka Society Registration Act. And apart from that, under the new law, you also, before you have to, if you are already a 12-year registered company, you have to take the permission of the commissioner before you actually, you can put a draft amendment, get it approved by a general body, take the permission and then incorporate it. That's what the Supreme Court has recently said in the BCCI matter. When they said every matter, notwithstanding it is not governed under the Societies Act, they said you have to pass in the general body, give it to us and we will approve, then you all implement it. Till then, it is passed by the general body but not implemented. You can't activate it. Whatever your changes you are doing, you can't implement it till the society registrar approves it.
Okay.
Approval is mandatory.
And this financials every year what we file, what we do is
Louder,
also,
louder,
the
please.
financials what we do is also we have to file, we have to...
Yes, societies
Okay.
every year you have to file and they will charge some 0.25% or 1.01% of your turnover as fees also for all societies having turnover.
Thank you, sir.
There is a procedure on it. It's, though it's not an income tax related issue, I am very sure the Societies Registration Act charges a X amount of fees for doing that.
Noted.
Thank you, sir. Your sessions have always been insightful. So the Supreme Court judgment you indicated it's a prospective effect. So for the current financial year, it is impractical to take up any kind of structuring of the organizations at this stage, right? So and the organizations which are claiming exemptions under Section 1023C, especially the education institutions, now they don't have an option to register for Section 11 or under Section 12 because the time is it is always prospective. I cannot take a registration now for current financial year. I'll be given at the most for the next financial year. So what is the recourse available?
I think if you apply today, they'll give it from 1st April. Just check that out.
No, sir. If as a new organization, I mean, as a fresh application, the registration will be effective only from AY 24-25. I will not be getting for AY 23-24 for a new organization.
I'll check that up because according to me, if you apply this year, they are giving from 1st of April 23. But
exactly, that's what. I cannot claim exemption for this financial year.
IQ assessment year 23-24 is my experience. But anyhow, if you are saying that they are not giving you for 23-24,
right?
So on 23-24 you are contravened. The only recourse available to you is to make an application today, and then make sure that your records prior to judgment and after judgment are perfect, that you are not contravened subsequently, and then litigate a little to ensure you get success on the principles of equity.
So this year 23, I mean AY 23-24 is a year of litigation. Although for the next year I could always claim exemption, this year will be a problematic year.
Not problematic, it will be litigation. It will give you some work. Give me some work.
Thank you, sir. Yeah.
If there are no problems, there is no life. I'm not fully aware of it. Name the decision, I'll be able to tell you. Which decision, no? Madras High Court. What is the Madras High Court? Take it out quickly. I'll address that. If they tell me the name, I can recollect and tell them. Madras High Court. After Supreme Court came? After Supreme Court, is it? After Supreme Court, the only decision came was Fernandez, IT Hyderabad. Madras High Court on I will. You please take my number. I will read it and explain, sir. Offhand, I have not read it. I will do it for you. I owe an obligation to you. If you can give me the judgment, I can tell you in 5 minutes what it is. Which is the one, Madras? Madhu, just try to take it out. Prashanth, time is there.
Sir, in JST we have a specific section which says I can apply for 3 times adjournment. Whereas in income tax, while the assessment is going, they are asking us like to submit within 2 days. And if I ask for an adjournment, he says it's a threshold time limit. You cannot be extended time limit for extension. So in that case, like sometimes like if I'm outside, for a visit or something, what recourse I have, sir? Just wanted to.
Right, a lot of things has happened. As the income tax officers in faceless scheme are doing all this, and I think Madhu, my colleague, advocate, chartered accountant advocate now, every week he's filing one writ petition and getting it quashed and restoring it back to give you all 1 month time to file a reply. So one work comes to him, that's all. Routinely it is happening. At least he must have done some 50 such in Karnataka, Bangalore. Within 2 days they will say will not give you, pass an order. Then they'll pass some unwarranted high-pitched assessment. So the 20% payment also becomes very unreasonable to us. So the only recourse available is to file a writ petition, get the order quashed, and direct the officer to give you minimum 1 month time, which the courts will definitely do. And these officers are doing it like that basically because they are very unhappy doing faceless assessment.
I got it. Yes, thank you.
Annadata Zuki Baba, that is a standard answer. Abhilasha is supposed to ask some questions. Where is she? You got clarity. Please, I'm waiting.
Two PAN numbers.
Two PAN number.
Two PAN numbers. So one in the as a AOP, another in the trust. So we surrendered the one PAN number of the AOP. But lot of TDS deducted in TDS and TCS deducted in that PAN number also for the previous years. So we were having two different TDS 26 years. So assessing officer is not allowing the TDS in another PAN number, which we surrendered. So how to tackle these things?
See, I think if my memory is right, there's a rule which says that how to get that PAN transferred. Some rule 37 UEA, something is there. You have a look at the rules. Like especially it happens very often in case of co-owners. A property they deduct off in one hand, 4 people are offering income and things like that. There's a procedure available, and you have to follow the procedure, and you're bound to get it. Ultimately, at the end of the day, these are errors that have happened. We all have to understand one bottom line. The principles of equity cannot be taken away in a taxing statute. These sorts of technical errors made by, let us assume in your case, you are not supposed to have two PAN numbers. Being a voluntary organization, A would have come, he may not have the access to the earlier number, or he wants to take a new number and keep his portion clean. All these things have happened because how people behave in society. But I don't think so. Technical violations like this can deny you. Doctrine of undue enrichment, Article 265 very clearly says, no tax can be collected unless it is in accordance with law. Unless there is a statutory provision which prohibits them from giving credit, you are entitled to the credit. What is not expressly prohibited is definitely permitted.
Okay. Sir, in Madras High Court, what you refer, are you referring to MAC Public Charitable Trust, wherein you're talking about capitation fees and other things? So I think the issue here is the trust was collecting capitation fees in violation of all the conditions, and Section 11 has been denied. Second issue was on retraction, and the High Court has held that if not made within a reasonable point in time, without tangible materials to prove that retraction was on coercion and undue influence, retraction would be not accepted by the department. Straight on facts.
Yeah. This is precisely what I addressed in my initial remarks. In the event of the authorities under the, it's purely a case of capitation fee. A decision recently, about a month back, Kripanidhi, what is it? Kammavari Sangam. The Karnataka High Court has said, of course it was just before the Supreme Court came, that the income tax authorities cannot look into the other contravention unless the other authorities have actually said so. Now that stands diluted by the decision of the Supreme Court, because Supreme Court has said you have to look at it. But the point is, there is bound to be, in that case, admittedly there was a contravention under the Tamil Nadu Capitation Fee Act. They were penalized. So that facts are different. If there is a contravention, but the concerned authority has not taken a view, one approach to the solution will be there. If there is a contravention and they have not taken a view, the officer is taking a view and creating a new system, there will be one line of defense. There will be two line of defenses based on actual facts of your case. The Madras High Court is limited to a position where admittedly, on the search portion I will leave it, because on coercion it's a very big topic by itself. If I start, then all of you all will miss lunch. As far as the 11 is concerned, they said they contravened the act, palpably contravention. When there is a palpable contravention, the income tax department has invoked and Tamil Nadu has given, and if that matter goes to Supreme Court, chances of success are less unless they do a proper strategy. What strategy? I will tell you lunchtime. Thank you. No more questions? I generally believe after any person coming to a conference or a seminar, I've always been advocating, I'm very happy that the chairman took my view. It is very easy for us, being lawyers or professionals, giving conferences to speak 1 hour, 2 hours. I have been always requesting chairmen to permit only half an hour for the speaker and 1 hour for the audience, so that you go back with some answers for the queries that are bothering you. That is a much more interactive session. Everybody, we are dealing with already a professional body, and all of you are professionals of competence. It is just that we are now sharing our experience. The difference between our knowledge and your knowledge is that we have experience, and which we are willing to share. And if we go on telling what we want to know, because we know a lot of things, in a court we have to argue so many things other than the subject. In fact, just before, give me 2 minutes, sir. I will not. Way back in 2006-07, I was arguing before a very eminent judge who ultimately went to Supreme Court. The next day was a boring day from morning. We were monotonously reading, because High Court hearings are much different from CAT and tribunal. They will look at each line, they will read orders. You have to run through, it's a different process. Around 3:34, he suddenly said, Shankar, it's very boring, you've been reading this. From morning, there's absolutely no joke. What has happened to you? Yes, my lord, I'll give a joke, very nice joke. What? I want to tell your lord that I have never lost a case before your lordship. So, what are you thinking that I'm going to give relief to you in this? He asked me. No, my lord, but yesterday I thought I dictated something against you. I said, yesterday, no, where have you dictated against me? It's not signed and come, my lord. I thought you dictated in my favor. No, I'm not getting the joke, please explain. And I told him, in my practice, I practice only against the government. When I win a case, my clients win. When my friend wins, my department wins, my country wins, so I win also. Thank you, gentlemen.
Thank you for the knowledge enriching session, sir. Definitely your interaction has helped our member, and definitely I think there's some value addition to the knowledge kitty. We would like to have one small felicitation program for Shankar sir. So I request MC members, okay, and dignitaries on the dais to come forward. Thank you.
I request all the members to